What? Hello, stream. We are back. We are back in the business. That sounds a bit loud to me. I don't know about everyone else. Can you hear me? Can you see me? We have just begun. It still works. The soundboard is back. So we've got the meta glasses on. Try and get the beginning of stream here. We'll take those off now. That was fun. How is everyone? Are you ready today? Yeah, sorry about that. We're gonna keep an eye on the controls on the mic. But today we are joined by two market wizards. Just as we thought we couldn't beat last week, right? Stream 1, Jack Schwager, the author of Market Wizards, Lance Breitstein, a future market wizard, and 8-figure trader Umar Ashraf. Well, this week we got two market wizards and a world-renowned trading psychologist, probably one of my favorite trading psychologists personally, the one and only Rande Howell. We just had that episode go out not long ago with Rande Howell, to be fair, and it did really, really well. People absolutely loved it, and yeah, absolutely incredible. Who's looking forward to this one? Who is looking forward to this one? It's going to be great. It's going to be great. This is lo-fi. We've got to turn that down a bit. Is that better? It felt a bit loud before. We're all ready. And as always, of course, we have giveaways with our sponsors of the live streams. So, of course, you're going to see giveaways from Funded Next, a great CFD prop firm. So make sure you check them out. Yeah, you actually get the best offer in the entire industry using that code CF there. We have Market Journal, of course. So there isn't anything to give away there. That's more of just a pure value, 100% free. But of course, prop firm trader as well. So, if you want the best deals on your prop firm, whether CFD or futures, check out propfirmtrader.com. But we obviously have Apex accounts to give away today, and those Funded Next accounts and Trade Zeller subscriptions. So in between our guests, I will make sure the mod in the chat is picking those winners for those who are actually listening, right? Bear in mind, with giveaways, I'm not a massive fan of giveaways, and I'll tell you right now why. Because most people, when it comes to giveaways, that's all they're here for, the giveaway, and that's all they'll talk about is pick me for the giveaway. No, they're not the people who get picked. The people who get picked are the ones who are actually engaging in the conversation in the live stream, right? Actually what's happening in the live stream, engaging in good quality questions for the guests and reacting to what the guest is saying. They're the people who are going to get picked. So, really keep that in mind when you're spamming the chat saying, pick me, oh, I want to win, it will change my life, blah, blah, blah. Don't talk about the giveaway. Talk about exactly, someone said it right there, look, kindly give me. You automatically are not going to win it now. So, yeah, just keep that in mind. Keep that in mind. It's very important to understand that you're here for your trading at the end of the day. And yeah, so if you want to win an Apex account right there, 80% off right now anyway, using the code CF. So make sure if you're ready to level up your futures trading, you can get up to 6 million in funding with Apex, which is incredible. And they paid out over $500 million, that's with a B, $500 million to traders just like you around the world. And that's why they're the biggest futures firm in the entire industry. So, yeah. Very excited. Very excited for today's stream. Incredible guest. Chris Camillo, if you don't know, is a phenomenal trader. Super unique. Super unique. Probably won't hear another trader like him. I have never come across one who uses information from social media, specifically TikTok, to gauge trade ideas. And he trades information, so he doesn't use technicals, and it's not your fundamentals. It is information. What does that mean? So a good example, I won't speak too much on it because obviously he's going to be in the stream, so we don't want to ruin anything. But of course, he's using information such as, for example, the Barbie movie that came out a few years ago now, a couple of years ago at least. Seeing the hype of that, right? And how much hype was on TikTok through comments, right? And feedback through comments, was able to then take a trade idea, off the back of that, right? Or even COVID. I think COVID was less so TikTok. It was actually information again, but it was actually translating Chinese newspapers, right? And Chinese articles to find out what was going on that side of things and being able to position ahead of time. So really deciphering information early, right? And being able to position accordingly. And super unique, right? And has taken a small sum of, I say small, it's obviously a large sum really, but in terms of, I think it was like $60,000 or $70,000 to over $50 million, over 50 million, using that particular strategy. Absolutely incredible. Absolutely incredible. So I'm really excited for him to come in. I'm really excited for him, and he's actually going to be our first guest up. So it will be great. Yeah, Chris Camillo podcast wasn't that long ago, but yes, Rande Howell after him, and then we have obviously the legend as well, Peter Brandt, a 50-year trading veteran and someone who really doesn't hold back when it comes to trading, and his thoughts on the markets. Here we go. We have our first guest ready. We have our first guest ready. I'm just letting the people know that we are here and we are ready to go. So here we go. Let's get Chris in here. Hi, Chris. How are you?
How you doing? Good to see you again.
Good to see you again. Yes, I'm just going to set this up with you right now. Here we go. And here we go. We are live, Chris. We are live.
Awesome.
It is a pleasure to have you with us today. I'm just going to turn this down. I'm going to turn this one up a bit here. And I think we are good to go. I think we are really good to go. I'm still getting used to the live stream, so please do forgive me.
You're good.
You in the middle there. But Chris, how have things been? As we last spoke in January, which feels like an age ago. I'm sure so much has happened in the markets, but how are you?
I want to say when we spoke, I probably mentioned something to the tune of the best days are ahead of us in terms of opportunity.
Mm-hmm.
And, you know, if you've been following this year, I think it's turning out to potentially be the best year of my trading career in 18 years. 2020 was a big one, so it's going to be neck and neck with 2020.
Wow.
But yeah, well, I tell people, like, if I don't screw up the last few months of the year, that is the last 5 months of the year, which I could do. So we'll have to see about that. But if I could just not mess up the next 5 months, I have a real shot of this being the best year of the last 18.
Incredible. And well, would you say that's just down to the amount of opportunity available? Or is there anything specific that differs from the previous years,
No, I mean, I think it's directly in line with my longstanding thesis that the more change in the world, the more opportunity as an investor, and the quicker that change is happening, the more opportunity. So I think it's, you know, fairly undeniable that outside of, you know, from perhaps the year of the pandemic, which is the biggest change of the century in terms of our human behavior and consumerism, that we've never seen anything remotely close to the change that has been, you know, happening due to AI. So, you know, that has been the theme of a good number of my trades this year. Not all of them, but a good number of them this year.
No, I remember you mentioning actually in early January, we were talking about robotics and AI. And it was a very interesting point, actually. I remember what was funny is we recorded that podcast in January. And it didn't come out for many, many months due to the amount of podcasts we recorded. But it was actually the day before everyone was scared about TikTok being banned. and we discussed that, which obviously when that came out months later, people must have been quite confused, no doubt. But A lot of people, just before you joined, when I was mentioning, obviously we have Chris Camillo joining us, Market Wizard, a very unique strategy. That was one thing that people were highly interested in. I'm sure obviously you get that question a lot in terms of your methodology of choosing your trade ideas. And I wanted to ask you, as something that the audience can really resonate and take away from, now, if traders wanted to start using information as the primary source of trade ideas, where would you suggest them to begin? Like, what would be the first few steps in starting to view the markets in the way that you do?
So that's changed a lot over the course of the past, 15 to 20 years. When I first got started as an observational investor, I used to call it information arbitrage. I now call it social arbitrage because, well, the world has changed. The world has become digital. Even if you go back to the 70s and 80s, where the famous Peter Lynch, one of my favorite investors of all time, used to do something similar to what I do today by simply walking malls, right? And just sticking his head in stores and looking at lines at the register. Now, he was also, a fundamental investor. So that was just part of his strategy, where I'm a pure observational investor. I only trade one piece of information at a time, ignoring all fundamentals and technicals. But what you're trying to do is you're trying to surface like some change in consumer behavior or shift in culture, or it could be a change in technology, a change in weather, politics, government regulation, anything that is changing that the world hasn't caught up to yet. And when I say the world, I mean the investment community at large. So I used to do that very manually. I used to say, you just got to retrain your brain to observe the world and to actually see things as they're unfolding, and to stop and start to connect the dots to investable opportunities when you identify that change. Now that is no longer how I do this. The world's become digital, which is amazing for an observational investor, because where your universe of opportunity used to be your town, your shopping mall, the restaurants, and the people that you had direct exposure to, which was fairly limited. Now, you have the ability to tap into all of the world's conversations in real time as they are happening, which is just a stunning source of data for an observational investor, because no matter what's happening in the world, someone is talking about it, not as it's happening, but even before it's happening, they're discussing their intent. So the gold standard for me for many years now has been comment data on social media channels. The last 7-8 years, primarily TikTok. Why TikTok? It used to be Twitter in the early 2010s, when people discussed what they were doing that day, what movie they were seeing that night, the thing they wanted to buy that weekend, what restaurant they went to last night. They no longer do that on Twitter for the most part. But on TikTok is this beautiful place where people, for whatever reason, are really comfortable sharing their thoughts in real time. So yes, I watch about 4 hours of TikTok videos every night. I've been doing that 7 days a week for years and years and years. But it's not necessarily the watching of the videos; it's the reading of the comments. So I'm ingesting thousands and thousands of comments a night, because someone will have a video, and I'll just talk about one of my current trades, Lululemon, let's say, right? So someone will share. They'll share, a new color of a tote bag, and you'll look in the comments and you'll see hundreds, if not thousands, of comments of "OMG, I must own that. I tried to buy that yesterday. They were already sold out of my Lululemon," right? So in real time, you're able to get a sense for like true organic depth of interest, depth of demand, not simply based on quantity of what you're reading, but based on the words that are used. Are they using words like obsessed? Like it, so you just, I've been doing this forever. So for me, it's innate. But you really get a true sense of the depth of interest and the around certain subject matter in real time. And, it's just a very special moment to be an investor because, as I spent many years. I basically created the first data intelligence company for conversational data interpretation for Wall Street. Worked with the largest hedge funds in the world and the largest sell side banks in the world for years. My company is called Ticker Tags. That company was sold to Jefferies Bank, and I tried kind of training Wall Street how to do this, and they were just kind of mostly blew it off because it was so different for them because it was not correlated data, right?
Mm-hmm.
Wall Street wants correlated data with 5 years of history. And it's like, no, like the language changes every few years. So you're never going to get 5 years of history, and the subject matter is always changing. So that just doesn't work for a conversational data source. But what's so special is that the data sources that Wall Street relies on, which by the way, I buy, I buy credit card swipe data. I have, web data, right, where you can get very granular and really assess, how many people are hitting the checkout page of these stores, or, how many people are going to this brand at Target.com, right? So like, I get that data too, and I analyze that data, but none of it is as real time as conversational data because so often a brand won't even have enough inventory of a product category for it to even show up meaningfully in the larger realm of credit card swipe data. So you might be a couple months out or 3 months out, but if the demand is there, then that when earnings happens, that management will come out and say, hey, they might raise guidance because they know they're increasing their supply around something they have a high degree of confidence they're going to sell out because they're taking wait list orders. So it's a special data source. It's a data source that only I've cared about for the past 12 years.
Yeah.
And now finally other investors are starting to catch on to it. To some extent, institutional investors, but a lot of retail investors are finally who I've been on YouTube like you. I've been on YouTube since 2017 talking about this to nobody at first, and now a lot more people than nobody on Dumb Money Live. So it's been so fun to see other people see the value in this and to actually have a community, because you technical traders, you have great communities, right? Like you're all nutty. I don't get you. I don't get the technical traders, right? I've always said that I used to rip on technical traders, but so many are my friends, but I do it in fun. I never really had a community of like-minded investors that appreciated what I do, but now that started to happen the last few years, and it's been a lot of fun.
No, definitely. There was so many points I want to take from that, but one major thing, as you said, is it's becoming, thanks to you, really putting it on the map and really showing what was possible and what is possible in today's access through social media of what you can do as an investor and as a trader. And one big thing you mentioned there as well in terms of Wall Street not really taking on board what you were suggesting and showing, and it really opens the eyes, because I think the average retail trader, a lot of the viewers now watching and who have watched the podcast episode that we've done, a lot of people put Wall Street on a pedestal, right? And institutions on a pedestal, not realizing they actually have a lot more benefits as a retail investor / trader, such as being able to action this sort of information, and many others, right? But people don't realize that at these firms, to even place a trade, there is so much detail and regulations and red tape and all these things that has to go through before that trade could even be placed or be agreed to be placed.
It's so much more than that, because the truth is, now outside of like algo style clipping and trading and stuff like that, where institutions truly do have an advantage in being able to, take pennies here and there off of every trade. I mean, that's a whole different world. But it's mostly just a job for professionals, right? It's mostly just a job. And they are de-incentivized to do the things that they should be doing. And also, there's so much groupthink because they have to show up to work in a building with so many other people that live in the same area as them and think the same way as them. And there's just a lot of that groupthink and herd mentality. These are disadvantages, massive disadvantages. And listen, I would never have believed it if I didn't spend years of my life, and listen, flying to New York every other week for years, meeting with the top funds and banks in the world, spending so much of my life with these guys, who I love, by the way. Like, they're my friends. So, but it's almost hilarious when you get to see what's behind the curtain. It's stunning because you're like, what? There's nothing here. This is like, I always had thought for my whole life. I always had thought, like, how could they not be putting up better returns? How are these guys doing so bad? And I always had all these theories on it. And then when I got to actually see it, I'm like, now I get it. Now I know why. And there's nothing that bugs me more than this mentality with the retail traders. Oh, the game is rigged. Every time a retail trader doesn't perform or a trade goes bad, the game is rigged. I'm like, you guys, shut up. Like, stop it. Stop whining about your bad performance. Listen, we were all there. I had many years when I was younger learning the ropes and understanding what didn't work about performance. But just to say the game is rigged against you is a cop-out. It is certainly not only rigged against you, but self-directed investors have massive, massive advantages over institutional Wall Street, especially with the form of trading that I do, right? Or investing that I do.
No, it makes complete sense. And I think a lot of people, as you said, they use it as a cop-out and they don't understand what's behind that curtain. And they assume it's just only pure genius that they wish they could get on, or some sort of holy grail behind the curtain. One thing you did mention earlier, but I think it was more so in regards to the foundation of placing that trade or starting to generate the trade idea in terms of having that one specific idea. One question I had, I wrote down, was in terms of, do you look to only sort of trade one idea at a time, or how many of these ideas are you sort of running with and investing in and trading at once? Is there a limit that you have, or is it more so based on the quality of an idea?
Think of it as an opportunistic funnel, and the funnel needs to be massive at the top, as big as you can get it. And you have so many starts. I mean, so many starts. And as ideas hit the funnel, like you think you see something, you go through this process. And I talk about the process in my book, Laughing at Wall Street. But honestly, my book is so old. It's like 2010. You had Jack on the show today, right? Jack Schwager?
Last
Is
week,
that right?
Yeah.
Okay. So honestly, Jack Schwager's chapter that he did on me in Unknown Market Wizards is so much more current than my book that I was like, if you want to know about me personally and you want a good read, go get my book. Or I make like a quarter. I actually, I don't. Yeah, if you like get an e-version, my publisher pays me like a quarter. But I'm not doing that for money. But if you really want to know the newest part, Unknown Market Wizards, because I go through this process, the funneling process. and you have this change that you think you found, and then once you identify that that change is real, there's this, you have to qualify it, like, is it really meaningful to this public company? Is it a needle mover? And there's a process to determine that. And then even if it is a needle mover, sorry, that's my dog. Even if it is a needle mover, um, is it already known by the investment community? Or, and it's usually not black or white. It's not like they know or don't know. It's to what degree do investors already know about this thing that you have surfaced, right? And you have to assess that. And then you have to assess, okay, well, what else is going on right now that could be impactful for this company, perhaps more impactful than this piece of information that I found that I determined to be impactful. So that's part of the process as well. And then you have to develop a trade window. And that's really important, because this piece of information, when do I believe other investors are likely to learn about this? At what point will it hit information dissemination, or information parity is what I call it, right? Is it a day from now, a week from now? Is it earnings? Is it a week before earnings? You know, I talk about this a lot. Like, it used to be earnings so much of the time, but now that institutional Wall Street has access to all these like really good data sources, they will often get a pretty good read on what's happening like a week or two, sometimes 3 weeks before earnings. So a lot of times, like when if I'm investing in, I can be investing in something related to a movie that comes out. So the information parity, like going back to the Mattel trade at the Barbie movie, was the day that Barbie came out, because I knew that that's the reviews were going to hit that week, and I knew that we're going to assess box office. There was going to be a lot of hype that was going to hit Mattel that week, so it had nothing to do with earnings. But you have to go through this process, and very few things fall out of the bottom of the funnel to be a truly good social arb trade. And even when they do, depending upon, you know, how much of a needle mover, what how many people already knew about it, like it could be low conviction, medium conviction, high conviction, and so that will have an impact on how large of a trade you make, right? So there's a lot of work here. So I would say, to get back to answering your question, is I'm constantly feeding the funnel, as is my community, because like this is a collaborative effort now, which is what I love. People don't believe this, but like more than half of my ideas originate from my dumb money community, right? Like, and I love them so much. And that's why I share so much with my community, because I just like, you know, I don't have a community. Like I'm not like a course guy. I don't charge money and stuff. I don't even take sponsorships. But the value that I extract out of my community is the collaborative effort. So they actually help me make a lot of money, and I hope I help them make a lot of money as well, through sharing of ideas and going through this vetting process, this funneling process. We go through that together. I have like a dumbmoney.tv Discord. So like it, not often do things fall out of the bottom of the funnel, but I'm constantly feeding the top, and I'm constantly in the process when things are going through the funnel of working through that process. And so it's a lot. It's a lot of work. Okay. So, and sometimes there's more going on than other times, but I'll tell you, lately, since the AI thing hit, there's been I have been busy. I mean, my kids are like, Dad, what do you like? They'll come. I do this Saturday night, Sunday night. Like if I'm not at an event where I have to be someplace with my wife or something, like this is what I'm doing pretty much between 10 p.m. and 2 a.m. 7 nights a week. Not that I don't also do it during the business day. I do to some extent. But there's so much opportunity out there.
No, there really is. There really is. And that's the interesting thing, though. So, like, being able to funnel that information, but also, is there sometimes, depending on the information you're deciphering, are there different time horizons that are coming with those ideas as well? Like, are some quite short term in terms of having to move with speed, or is there a specific time horizon of that trade idea that you prefer to have a limit on in terms of
No,
speed?
there are no hard rules with time horizon. Sometimes it could be hours.
Wow.
And sometimes it could be a year. So it's totally dependent on the narrative of the trade thesis, the social arb trade thesis. Everything that I do is opportunistic. I could trade any sector, any company, and while most of the time it's public, because we prefer for it to be public companies, as you are well aware, a big part of what I've been doing the last few years has been private companies with robotics. So in fact, just before this, I was on a really exciting call for a robot company. You know, I'm really big, especially with Apptron. I'm invested in Apptronic, I'm invested in Figure AI for full humanoid companies. But I was on a call for a company that was a startup that was doing multi-use generalized robotics, so not full humanoid. I've been looking for a company in that space for over a year and a half. I think I might have found one now. So I'm likely to make a pretty decent sized investment into that company. But those are private companies, right? Now, the disadvantage with private companies is usually, not always, but usually you have to invest, $50,000, $100,000. So for a lot of investors, and then you have to like assume that money's gone for 10 years. There's no liquidity, right?
Yeah.
So that is not always something that in regular retail investors can do.
Yeah.
But that's a big part of what I do as well.
No, it makes sense. And there's actually an interesting question here in the chat that I would love to ask you, because it's I would be interested personally to hear your thoughts on it as well. So someone asked, what's more dangerous for you personally? Fear of missing out or fear of losing money, and why?
Well, I'm really fortunate to be at a point where fear of losing money is not an issue for me anymore. I've always talked about how for any investor has the ability to think like that. And to think like that, you have to bucket your money. So you have to have money that is bucketed for a high degree of risk tolerance. And that money probably doesn't come out of your college savings account. I wrote a chapter. This is the one area of my book I'm really proud of. I have a chapter called Other People's Money, and it's all about, if you think of every dollar that you have as $100 in the near to midterm future, which it absolutely can be if you're investing aggressively, then all of a sudden you start making trade-offs in your life and you find money. It could be, I don't know, getting your hair cut every 5 weeks instead of every 4 weeks, or mowing your own yard, or doing your coffee at home. Just 100 things that you could be doing, right? Think clipping coupons, things that are just like not worth your time. But when a dollar is $100, all of a sudden, everything is worth making a trade-off for.
Yeah.
So that's like a strategy that I used to have of like, how can I find money to put in this high risk bucket when I don't have a lot of money, right? So like, if you think like that and you have a high risk, high tolerance bucket, then you're able to like invest concentrated, invest with leverage, do things that you would never do in your primary account. And that's how like you aggressively grow capital, right? That's why the wealthy get wealthier, because they have capital that they can take big risk with, that they can be illiquid with for years, that they can be concentrated with, they can be levered with. So that's really important. That's where I am. I've been there for a long time. So I'm not really concerned about losing money. I'm concerned about fear of missing out. I mean, listen, I still to this day miss out on more opportunities, right, than I catch. And I keep telling people this, like, if you're an investor today, just like you realize something. Like, I don't know how long this is going to last for. I don't know if it's 2 years or 6 years or 10, but the best opportunities are likely still in front of us right now. So this is something that you need to take seriously, because I do not know at what point this shuts down. There have been moments throughout my life where I'm like, okay, we just went through a cycle of massive change, and then like we've had some period of time where there's not as much change. Uh, I don't know, but dude, this is a great time to be an investor. Like especially with my methodology.
Definitely.
Like I'm not like trying to like just pump what I do, but like this is the time to be an observational social arb investor, because the world is rapidly changing, meaning there are going to be huge winners and huge losers, and all you have to do is know where to look, know how to observe, know how to go through this process, and learn how to connect dots. And hopefully figure out a way to bucket some of your money into a higher risk tolerance, investing model for yourself.
Would you say, well, what would your thoughts be? Because as we talked about earlier, in terms of like the technical crowd, then you have like your fundamentals crowd as well. Like when it comes to this style of trading, right, the social media arbitrage, the information arbitrage, do you believe that if more traders looked at this approach, they would find better success? What are your thoughts on that?
I know they would. I mean, I know they would. And the craziest thing is so many like retail traders are not mathematicians. And they're not like, not that I put much credibility into like the greatest fundamental analyst or anything, but they're probably not top 1/10 of 1% finance head analyst, right? And you don't have the time to do that anyway. So I'm like, why are you trying to compete on that level, right? Like I'm not saying that there's not like opportunities for people to succeed in those sects of investing, but like most of us are not like that. Most of us are just regular people, and most of us probably have day jobs and families and hobbies and stuff. So like this style of investing, I know this sounds weird, but like it's actually fun for like a regular person. Like and you could actually be amazing at it. Like I've witnessed over the past 5 years, just totally regular people like doctors and UPS drivers and just all kinds of regular people who are in like my community become like exceptionally good at this. Like I have a lot of people in my community that are like marketers or just they just have a job, at a company. And yet they've like honed in on this for a few years, and like they show me what they're doing in terms of the returns, and it's pretty nuts. It's crazy. And again, I want to remind everyone, like I don't have courses. Like I don't do. I say my community. It's just we're just sharing ideas, right? Just people in Discord, my X account, like just we're just sharing ideas. And it's still crazy to me that people, I know it's hard to have something new that people pay attention to, because if you think about it, people tend to do what people have done forever. So like a lot of the investment books that I hear people reading, they're like, "Oh, this is my favorite book." It's like 30 years old or 40 years old. Like in what other industry would you like go all in on a thought pattern from like 30, 40, 50, 60 years ago? Not that those aren't amazing and like Benjamin Graham and like, yeah, I get it. Buffett, all this stuff, but like in what other world would that be relevant? Like you know, GE had you know, the best corporate management model, but that was like in the 80s, dude. Like nobody manages their companies like that anymore. Like we evolve. We evolve. So like why do investors or traders, why are they so stuck on like what people did 20, 30, 40 years ago? I don't understand it. You got to evolve. And by the way, like there will probably be something new, I don't know, in 15 years, 20 years that will make what I do today kind of played out, which is cool.
Which is the constant evolution of the space of
Every
technology.
space. It's not in fact, it's just every space,
Yeah.
right? Like look at marketing. Look at like every is there a single thing that you could think of where it's like stays the same? No.
There's only one thing where you see the pictures, right? And that's just the
Yeah.
education system. That's the only one that seems to not
Which
evolve
it
too
shouldn't.
much.
It shouldn't because it's bureaucratic.
But yeah, other than that, yeah, you're completely right. And I think the interesting thing is, I think that a lot of people come into this industry seeing the same old stuff, right? Technicals and these technical courses and this technical marketing around it. Wow, that's why I love having this conversation with you in the podcast that we've done previously, and I was so excited for it, even for today, is to really just try and highlight and put it in front of people this methodology, because I think, to your point, a lot more people would. However, I will point out, do you feel like to make people aware that the process, like you have to be willing to connect, as you said, you have to be willing to find ideas, collaborate in a community like yours, for example, and as you highlighted already, it's not charged. It's literally when we say community, we mean literally it's a community of people who are interested in this style of investing and trading and observing information and using it to your advantage. But you have to collaborate. You have to be willing to do the research, be able to connect those dots, and be able to follow the money trail, if you will, of that information, of what it should end up as a result. Do you feel like there's a character type, if you will, or something that people should be aware of when looking to do this?
Yeah, I mean, I think there are some parallels between um, great investors that are technicians and fundamental investors, and great investors that are social or observational investors, which is you have to respect truth above all else, right? You have to be your own devil's advocate. You can't get caught up in your own narrative. You can't get caught up in your own kind of biases. And the one thing about me is I am happy. I'm always seeking out the devil's advocate take on my thesis, and I could be out there like talking about how I did all this work and I have this thesis on this trade, and sharing it, and then like 3 weeks later I come across something. I'm like, oh, well, that's either new information or I missed it, or okay. I'll be the first person to be like, I was wrong. I'm out. I'm out. I'm out. I might go take the opposite side of the trade. So few investors can do that. Especially on X. I see these people on X that they're so stuck in their beliefs. They don't want to go back on what they said previously. I'm like, dude, that you're never gonna get anywhere in this world like that. Like the real magic is seeking out kind of ground truth, and always being able, always, looking to change, right? Like your thought pattern on something. And if you're wrong, you're wrong. And by the way, like, I don't know, this has really nothing to do with what we're talking about right now, but it just popped in my head. Like one of my biggest pet peeves with traders is like, oh, if a trade starts to go wrong, you got to get out of it. I'm like, what? Like, what do you mean by wrong? So like you're in a trade and all of a sudden it starts going the other way and you're losing money. Like, but has my thesis changed? Like, cause like if my thesis is the same or has gotten stronger, just because I'm losing money, the stock is going the other way for some other random reason. Usually I'll double down or triple down or quad down on it. Like that's when I've made my biggest trades, is when, I'm in a trade and it starts going the other way and I lose all my money and I go down and all right, I'll just put more money in. Like if my thesis hasn't changed. Now, if I find something that my thesis is wrong, then of course I'm out, regardless of the trade. People are stunned to realize that I pay virtually no attention to price, except when that price action sometimes can reflect new information, right? So like, yes, if the price is moving, I want to understand why is it moving, but the price itself moving means nothing to me. So what I love is that we have these technical traders out in the world, because so often I'm in a trade with like a really strong narrative and a really big piece of information that's not fully disseminated, that I'm trading. And they're technical traders, because of some technical thing, will like sell it off or do something. I'm like, I love that, because I'm like, that gives me even more opportunity, because I know that this, I will say for sure, and this is undeniable, I don't think it's debatable at all, is that you put up a new piece of information that's really meaningful, that gets surfaced for the investment community around a particular company stock, that trumps everything else. That's going to trump whatever technicals, are in the market. That's going to trump, any random fundamentals that it was overvalued or undervalued, or like, it will trump everything else. Right. And that's what I love about being an observational investor, is that like that big piece of information is going to be the most important thing, assuming that it's real and assuming that it eventually surfaces and you get that timing right on it.
The interesting thing is that, one thing that's universal across any type of trading, including this one, is edge, right? Now, a technical trader will need to have, X number of technical confluences all tied together to be able to create this edge. Fundamentals will need certain fundamental factors to coincide with each other to have that edge. While this is interesting, and what I find fascinating about it, and correct me if I'm wrong, the reason why, as you say, you can have doctors to UPS drivers, and people can probably have a better result in their trading by following this, is because the edge is actually within the information itself. So when you've done the process of generating the idea, connecting the dots, understanding the time horizon for that trade and everything, and then being able to take action, the edge is literally in the information. So if that, as you said, the thesis changes, so the information comes to the narrative of that whole thing gets changed, then the edge is gone. Therefore, to pull your trade. So it's less emotional trading, in my opinion. I don't know what your thoughts are on that.
You're exactly right. And of course, like any other type of methodology, you got to get your emotions out of it. Yeah, just have to.
Someone asked a really good question here, and I think it's very, it's very good and very specific to your style of trading, which is, you're a master of seeing what others miss. Have you ever profited from a company that was totally out of favor to the masses because you saw people were wrongly abandoning it?
All the time, right? And it's not necessarily that people are abandoning it. It's just like they probably are trading it down for a good reason. But that is already priced in. But what is not priced in? Right? What is not priced in? So one of my trades right now is really controversial. Has been for the past few, couple weeks since I got in it. Lululemon. So, Lululemon, I don't know, they're down like 60-ish%, something like that. It's like everybody gave up on it. Wall Street's given up on it. Retail investors, like, oh, Aloe and Vuori are like eating their lunch, like, oh, Lululemon, that brand is over, and I'm just like, oh, I mean, okay, like tariffs, currency fluctuations. So you look at why Lululemon went down the last year. It actually makes a lot of sense. Like, it's fair. It's very fair. Tariff concerns are very real for them. Management has made some questionable decisions. They were the hottest thing forever, right? And now you have knockoffs. They're suing Costco because Costco is mimicking, their apparel almost identical. Like, well, okay, well, I'll go buy it at Costco then for like a third of the price. You have these hot new brands like Aloe and Vuori and others that are competing, and you're looking at this and you're like, yeah, I get it. I get why it's traded down. That's all priced in now. Okay, so like, but is there anything else that's not priced in? And so like, we're looking at the data, and all of a sudden, like, there are actually a few things going right this summer for Lulu, right? Like, they actually have a few different product categories that are starting to gain some traction. Men's are gaining traction, right? Like that tote bag thing I told you about, that actually is a real story. It's like a hot colored tote bag. Like there's scuba fabric right now, as of like the last few days even, has started popping on TikTok really big. Oddly enough, the younger generation, teens, are like bigger than ever when it comes to Lulu. And then of course you have the international and China. My read on China right now looks pretty good on Lulu, and they're crushing it in China. They have been, but like they're still crushing it in China. So like I'm looking at this, I'm like, okay, like the market gets so zoned in on a narrative that, are they looking beyond that narrative to things that they might not be seeing? So like, and by the way, full transparency here, part of the reason why me and my community got so excited on Lulu was some of the Google trend data was just insane the last 40 days, 45 days. Like Lululemon leggings and Lululemon bag and Lululemon like shorts and I mean, these things are hitting like all-time highs in the middle of the summer. Normally they only spike during the holiday season. So I had actually, like a week ago, I had probably one of the most levered trades of my life in Lulu. But then we realized that the Google trend data appears to be skewed the last 60 days across all Google trends, across numerous words, because of AI. So like I actually put out a tweet thread this morning. I worked on it all weekend. I'm proud of it. So at Chris Camillo on X, you'll see the tweet I put out a few hours ago. It's going viral. It's a tweet thread about how there's a lot of weird stuff happening with AI prompts generating search queries on Google that are corrupting Google search data, which is really tough for guys like me and my community, because like we can't trust the Google search data. Now, we're still long Lulu. We still actually believe that data is somewhat real. It's just being inflated by AI queries that are happening mostly on ChatGPT, that are now going to Google. And so it's a whole thesis that I put out there. Like, we'll see like the extent to which this is real or not. I'm hoping that Google becomes more transparent about what's happening. I hope they're able to like filter that stuff out, so we can start relying on their data again from Google Trends. So I kind of took down my trade a little bit, but I'm still really heavy long Lulu, just not as much as I was a week ago, because one of my primary data sources is like not as reliable. But again, these are things where you have to seek out truth. So like, I can't just be like, the data's, I'm like, no, like if that data is potentially suspect, I gotta bring down like the level of leverage I have in that trade now.
Yeah.
I'm still long, but like you just have to seek out truth, and you can't be, just because you got in a trade, you told everybody you were in the trade, right? But anyway, getting back to what you were asking about, a lot of people have been like ripping on me like the last week on my X posts, because they're like, dude, like Lulu's a dumpster fire and this, like Aloe's killing them. I'm like, have you actually pulled the data? Like what do you mean? Like they're still gaining market share even with Aloe and Vuori, right? Like, yeah, like they're definitely causing some price pressure and pricing margins, and they're definitely a viable competitor now that is going to be somewhat of a headwind. But it doesn't mean Lulu's over. You know what I'm saying?
Yeah.
Like, It doesn't mean, and people will like go to one store on one day, and whether the store was crowded or not on one day, be like, oh no, it wasn't crowded. There's nothing like Lulu's dead. Like it's crazy to me. And this is the issue with retail investors that are unsophisticated and just not willing to do the real work or spend real time learning about this.
Yeah.
Is they're just very naive to what actually matters. Um, and they don't want to do the hard work of, no, it's not one store check. You got to do like 100, and then you have to dive into 20 data sources and scrutinize each of them, and then they become a data matrix, and you have to balance out, well, I'm showing positive data on these 6, neutral data on these 3, kind of negative data on this 1. The community is pulling in, store checks from 40 stores, and this is what it looks like. Like, people try to get like it's black. Nothing's black and white. Okay. There's a million shades of gray when you're an investor. And you ultimately, if you're doing it right, you have to be honest with yourself and say, you know what, based on everything that I'm seeing right now, this is my level of conviction. This is the trade I'm going to make, but I'm aware that these are the risks that I'm taking on.
Mm-hmm.
And then there are other risks that I'm not even seeing, that I'm not aware of, but I know they exist. So like, but yeah, all the time. I'm doing it right now with Lulu. Most people are not long Lulu, like, obviously, look at the stock chart for the past 12 months.
I love it though, because it's, as you said, as you said just then, even those who are interested in this need to understand that there's no like easy way to trade. Like, you still have to put in the work. You still have to be willing to do the research and connect those dots. Do not mistake this as like, oh, this is an easier method to trade. It's more so giving you a solid reasoning and edge behind your trades, but even to identify that and to be able to action that takes work. And
also, one of my favorites from this past year, Palantir. Okay. I did a couple different YouTube episodes on Dumb Money Live, and did put out a bunch of tweets on Palantir. And I'm going to tell you right now, Palantir was like at $30 a share, $32. People ripped up, because I went in deep. I mean, I went in levered and deep with high conviction. And I had not talked about Palantir ever before that. I have people in my community who have been trying to get me to dive deep into Palantir for years. Okay. I put about 80 hours of research into Palantir before I did that episode, before I put my huge Palantir trade on it, like $32 a share, and then started talking about it. People ripped into me. They're like, you are so late. Like, you're going to come in and talk about Palantir. Now they're like, I was in Palantir at 16 and I'm out of it now. Or like, you're just like so late to the game to jump into this at 30. Meanwhile, I'm putting in the most levered trade you had ever seen. Risky options, insane, at $32 a share at all-time highs. Okay. And people are like, you're a moron, Chris. Like, you've lost your touch. You're like, you're buying this here? Like, you've missed it. You missed the trade. And so again, these are retail people that just, dude, I've been trained since I was 13. I'm 50. Okay. So like, trust me, like, I don't care that I missed the first $15 of this trade from 16 to 30. I was in the most levered trade in Palantir from 32 to 108, 110, whatever it was. I actually, at 115, I actually exited most of that, right? And I haven't been in it. I have an equity position in Palantir, but it's moderate after that. But the money that I made on Palantir from that, and of course, my biggest trade of the year is NVIDIA, where I had a 10-week period where I was trading levered NVIDIA call options every week for 10 weeks straight, starting when NVIDIA was already at like 105 or whatever. And so like, people like, how, I've been public about this, total portfolio I'm up total portfolio 3x this year, right? So, which is not normal for me. I'm very, Jack Schwager did my audit. I think last year I was 70 some odd percent, I think, annualized returns for 17 years annualized, which is insane. But, I only had 1 year when I did 300% plus. I think that was 2020 because of all the crazy stuff that happened then. I wasn't sure that would ever happen again. Like, I didn't think that was ever going to happen again, and it's happened. But it's because of that. Like when you have high conviction, these high conviction trades, when they come around, Robinhood was one, last year. Palantir was one. Nvidia was one. But now I'm out of the levered Nvidia trade now. Lululemon, it's one for me, but it's not high conviction. Like, Lululemon's a medium conviction trade.
Yeah.
It's not high. And I keep telling people, like, yeah, I'm talking about it. I'm in it levered, but it's not high conviction. Why is it not high conviction? Because I have data sources that are not aligning with the crazy Google Trend stuff that I saw.
Exactly, yeah.
And, they're good. They're showing like a moderate, decent summer, but not like, so like, there's risk here for me. And so, like,
final question for you, Chris. Just because I'm so fascinated, because I can see, and I felt even in person when we did our podcast, the fascination and the passion for what you do. But, is the money even a factor for you at this point? Or is it more so really just, do you really just enjoy the deciphering of information?
I enjoy it so much. It's like, people have hobbies. I mean, this is not work for me because I enjoy it. This is my hobby. It's not like grueling, monotonous work. And that's what I love about observational investing and social arb, is that, at least for me, it's actually a really enjoyable thing, because you get to immerse yourself in the real world. Like, I am immersed in every cultural shift, every consumer behavioral shift that's happening in the world. Hot brands, trends, companies, products, brands. Engage in humans conversations. It's really fun. It's actually super interesting. The money side of it is still important, not for me personally. Is I think we might have discussed this. My primary motivation in life now is like supporting my charitable foundation. That's where the bulk of my future gains are going. And so that supports mainly pediatric causes like pediatric cancer, leukemia, autism, as well as a lot of animal welfare. My family is very focused on animal welfare as well. Recently, I've had somewhat of a focus on elder care. So those are kind of the three missions of my foundation. And yeah, I would love to build it into $1 billion foundation at some point. And, we focused on like small to medium size, highly efficiently run charities, right? Like, and almost every charity that I donate to, somebody in my life is connected with, and there's a high degree of trust in the mission of that charity, and in their ability to be efficient, and they're really making a difference. So certainly, that is like a driver of when I do sometimes have to do some work that I don't enjoy, right? That's what's driving me, beyond the fun piece of it.
Yeah.
And then I have to say, and this, let's just be honest about this, there's a little bit of me that I never thought I would be here 18 years later with this track record.
Yeah.
And I always keep raising the bar. I remember I was like, dude, if I can pull off this track record for 5 years, that would, oh, wow. Because I did it for 3 years at first when I wrote my first book, Laugh at Wall Street. I hit 5 years. I was like, is there any way I can continue this for 10? Maybe not as high of returns, but like a 10. And then it happened. So 10, I was like 15, I did a 15. And now, as you can imagine, I'm thinking, God, how cool would it be to have like a full 20-year track record of like 70% annualized returns? And I'm actually like with this year, I think I'm going to be over 80 averaged out. So, gosh, I mean, that's like for someone like me that's been invested since 13, that's kind of like the dream. It's like it's a fun competitiveness, right? Because I feel like, yeah, I'm competing with all other investors, but we motivate each other to be better. And like ultimately, I want all retail investors to win, like every single one of them. So like, yeah, I want to be the best that I could be, but I also want tons of other retail investors to like be equally as good. And listen, I would love for there to be other observational social arb investors that are better than me. Like nothing makes me happier when I meet someone in my community. I'm like, wow, you did that better than I would. Like, you know, like you're going to be better than me in that way. That's what it's all about. So there's a community aspect here. There's a competitive aspect. There's certainly a let's do something good. Listen, I'm very fortunate to be in the spot that I'm in. I feel guilty if I don't leverage that to do something good for other people. And then ultimately, I want to serve as an inspiration to bridge every human on earth into the investor class, because hopefully someone sees an interview like this one, or maybe one of my YouTube videos, or one of my podcasts I'm on with someone, and they're like, I could do that. And like, maybe they open up a brokerage account and they start investing. Man, that is the real goal, especially as we get into this new AI age, when we might go through a period of time when it becomes a little bit difficult to value people's labor until the economy can go through a rebirth. And then hopefully the new world of human labor looks different but better than it is today. But it would be, if you're in the investor class, you know, that could help bridge you during hard times. And that would be my biggest goal, is let's get every human on earth into the investor class. That's what I really want to do.
Definitely. I have no doubt that it's, you know, you're going to make a huge mark in doing that, you know, through this system. It's truly unique. And, you know, I can't wait to speak with you again. Maybe actually, I might actually be out close to you later in a couple months. So I'll keep you updated, Chris. But honestly, a true honor to have you with us today. And thank you for sharing so much as well and being so transparent as always. But everyone, make sure you check the links for Chris in the description below. As he said, his community is free. So if you are interested in this style of trading or just learning more and want to check it out, make sure you go to his socials and do so. Chris, thank you again for joining us. And hopefully we'll see you again soon.
Thank you for everything. Appreciate it.
Thank you, my friend. Take care. Here we go, guys. Chris Camillo, a phenomenal trader. Some of the questions in the chat there weren't slightly relevant to Chris's style. That's the only reason I didn't ask them. There was one or two that were, but he had already answered them. So like in terms of the big city, you know, if you're from a big city, how do you do this? And there was another one, which was the big city. I think maybe something about you know, where to get the information, best quality information. So originally, Chris was more information arbitrage, meaning that he would, you know, be very active in going to stores and things like this and calling up stores and finding information that way. But since social media, and in particular, he said TikTok, is where he primarily spends 4 hours a day reading through comments and finding this information and people's thoughts and these narratives using TikTok to answer that question for you. But everyone, yeah. Chris Camillo, a very unique style of trading. I know very different to probably what you're used to hearing, but that's exactly why I wanted to bring him on, and I love bringing him on the podcast and even Fanatics Live, because at the end of the day, most traders are struggling. Most traders aren't winning or profitable in the markets. And a large part of that, don't get me wrong, comes down to themselves and finding a system and doing the work. But equally, a large part of that is that a lot of traders haven't found the system for them. right? And they're just going with whatever the narrative is they're seeing on social media, whether that's ICT or SMC or this fundamental course or whatever is popping and seems to be the most popular, or whatever it is that they can come across on social media seems to be the thing that they try. And that doesn't mean that it can't work. Of course it can. But this is why we really want to highlight this unique style that is extremely different, but has a ton of edge, as you can tell, from almost a 20-year track record with Chris Camillo, who has just had another record-breaking year this year, and we're only 8 months in, or 8 months in, or just under 8 months in, to be fair. But what are you thinking? How did you feel? How do you feel? We have obviously 2 more guests to come up. Rande Howell up next. Incredible. So make sure you get your psychology questions ready. Make sure you get your psychology questions ready there. It's buffering. Yeah, I can see that actually. I can see that on my screen actually. It seems to be stuck, doesn't it? Can you hear me still or no? Interesting. Let's see if the team can look into that. See what's happening there. Are we back in the game? What about now? Mine is fine. Maybe just try refreshing, but let's keep this going. But what an incredible guest, Chris Camillo. We have, obviously, as I said, we do have Thingy up next in terms of Rande Howell. Rande Howell is up next, so make sure that you get... Any drops in frames? No. Frame seems to be the same. 30 frames per second. No dropped frames either. It is bizarre. But yeah, any questions for Rande, please do throw it up there. Get it in the chat there. How are we feeling? I think it's sorting itself out. I'm not sure why it was happening, but we seem to be good again, which is good to see. Don't forget as well, obviously on chartfanatics.com, we have a new way of getting the free playbooks from every guest, or free strategy PDFs. On the website, you can go on there. There's a playbook section, and you can then pick and choose which guest strategy you want to download completely for free. So now you don't have to just wait for an email or go into an email sequence. You can pick and choose the exact strategy you want to go for. But yeah, save your questions in terms of psychology for Rande. He will be here shortly, and we will be going with that. So excited for that. Excited for that. I love Rande. Rande's one of my favorite trading psychologists. Honestly, a phenomenal trader. Phenomenal trader. Man, what a week though. We got another week in the markets, right? Just to Chris's point, this year has been incredible, and for a lot of people, volatility puts them off, and they do get scared, and they think you need to sit out. Understand that volatility brings opportunity to the experienced trader, and also opportunity to the new trader to recognize and observe volatile markets. You can trade them, yes. Obviously, trade with caution, and manage your risk anyway. Like that's the golden rule, regardless of what type of market you're in. Manage your risk accordingly. One thing that Chris was very big on, and is very, very important, and it did open my eyes as well when he mentioned it, not only on our podcast, but even here today, and I think he's mentioned it many, many times, is making sure to have a high risk portfolio. Meaning that you have different accounts. So you can have your normal risk, or 1% risk, let's say, for example, for a trade idea, but then you have an allocation of funds that is designated for high risk opportunities, because high risk can equal to high reward when you've done the correct information and due diligence on a trade. Struggled with that word almost, eh? Yeah. What was that? That was more like a... There we go. But it makes complete sense to do that, right? Especially if you're talking long term, and especially if you're talking about trying to get, obviously, the large gains like a lot of these market wizards have achieved. That's what it takes. That's what it takes. Okay. But as we can see here, where are we? Do you believe resilience, the ability to bounce back after setbacks, is more important than intelligence in trading? That's an interesting one, because intelligence in trading, what does that actually refer to, right? What does intelligence in trading reflect on? Like, what does that equal to? Does that just mean knowledge? Does that mean having an understanding of different things within the markets and different markets? Or does it mean in terms of, having a really in-depth edge, right? The ability to bounce back and have resilience is necessary. Like, you're going to need that to be profitable as a whole, because you are going to face losing streaks, you are going to face losing periods, you are going to face heavy losses, right? And without that resilience, how are you going to be able to overcome that and to stay consistent on your path and on your journey as a trader? The answer is you won't be able to otherwise. Well, yeah. Anyone else having that buffering problem still? Let us know. Keep us posted on that. Trying to let the team know. Randy will be here in roughly about 10 minutes time, is when we have him scheduled in for. So we'll keep things moving until then. Make my volume a bit higher. I think I can do that, yeah. We're trying to learn. I'll have to make sure to speak into the mic as well. But Rande Howell up next, eh? Who watched the Randy episode? Yeah, let's pick one winner to the mods. One winner for a Apex account. One winner for an Apex account. How do you balance sticking to your plan versus exiting a trade when you start feeling uncomfortable after entering? Truth is, though, if it's an actual plan and it's a data-backed edge, so it's been backed by data, whether back-tested is one thing, but live tested for sure. But you understand that data and the averages that come along with it, meaning the average results, both win and loss and break even or whatever other decision that comes with it. So you actually have very accurate and reliable data. That uncomfortability shouldn't be there, right? Because you've done the necessary work, and once you've had a trade idea and you've executed on it, then all you have to do from that point on is to sit on your hands and let the trade play out. No matter how uncomfortable it gets, that's what you have to do. Now, in terms of uncomfortability, though, that could be coming down to just maybe nerves for being new and being new to trading. Then, of course, that is normal, and that's something you have to get used to and something you have to overcome. Make a note of when that's happening. make a note of why it potentially is happening. Has the market moved in a certain way? Has a particular piece of news come out? Has the market not moved, right? Maybe it hasn't moved at all. Maybe it's just stagnant and that's making you feel uncomfortable. These are the things you want to take note of and be able to reflect on to be able to then make better and wiser decisions. And most of all, start to collect the data and of the reoccurring themes. And that's why things like TradeZella here on screen are very important. But regardless of whether you use something like TradeZella or just journal manually, what matters is that you reflect, because you could have TradeZella but then not reflect on the data, and then it's not going to be as useful to you, because the whole point is that you reflect on why these things are happening. How come this interview a private now? Can we know why? So I went back roughly about 20 episodes I removed, just pending verification, because obviously we weren't verified on our guests. So we ask every guest for a minimum of 2 years broker statements or track record to have to be hosted on the podcast. So yeah, we went back and just did that, privated / removed episodes, and then reached out to traders. If they want the episodes to go back up, then we just need the verification. So that was the process we wanted to do, for sure. Like the guy said before, if the hypothesis doesn't change, then neither should your trade. That's true, exactly. What do you think about the darkest side of trading, the mental health struggles? Have you personally ever come across? I haven't had like deep mental health struggles from trading, but I have, been in dark places. Dark places, is that the right word? I have had like really bad trading performance. For the first 3.5 years, it was really, really bad. And I was losing money I couldn't afford to lose. And I was essentially gambling. And it was getting to a point where I did feel down about it. I didn't feel necessarily depressed about it, however, or having like really strong mental health issues personally. But I'm sure there are people out there, and I have come across people who have. And, in those scenarios, you should definitely reach out to people for help. You should definitely reach out to other traders who can have an actual understanding of what you're going through. Some people might have to reach out to sort of a gambling helpline, because if they find themselves gambling, then they should definitely seek help for that specific problem. But the reality of any dark place, you need to really look at identifying why that's taking place. What is the process that's taking place internally that's leading you to feel that way and think that way, right? And, that doesn't necessarily solve the problem. But it allows you to start to identify why you feel that way and where it's stemming from and what's causing that to be the case. And then from there, like I said, community is very powerful. Not necessarily a trading community, but just generally people being around you, people who understand, and being able to understand as well that you should not let your results from trading impact you deeply on a personal level, because at the end of the day, a lot of the time, whether it be losses, heavy losses, whether it's blowing accounts, these things as a result of poor decisions that we have made individually as the trader. And so we have to have that accountability to understand that the decisions we make are the result in the end of our trading, whether positive or negative. Right? Whether positive or negative, it makes a huge difference. It seems like that lagging was happening across YouTube rather than just ourselves, which is interesting, but we'll keep an eye on it. Where was it? Sorry. Do you trade to make money, or do you trade to feel like a winner? Is that me? Tell me. I trade, I guess, to do both in a way. Kind of similar to what Chris said. It's a fascination. It's a passionate. Now, for me, it's a side passion now. Obviously, it was my main passion, but I'm so passionate about trading that I still want to trade. But I focus on these things like Chart Fanatics Live, Chart Fanatics, Words of Wisdom, because that serves a bigger purpose for me, which is trying to help others, which is something that's always been my goal from since I was a teenager. So that's where it serves a bigger purpose and why I'm so passionate and why I give so much in this way. But when I trade, of course, I want to win, but I trade for the enjoyment of deciphering information, right? Trying to read a chart, even though we just had Chris on who hates technicals, but trying to read a chart and decipher what's happening. I love that process. And yes, it feels great when you win a trade, but equally when you lose a trade, I find it fascinating to try and work out why. Normally, I can spot why within quite quickly, because a lot of the time it's probably been a missed higher time frame narrative, or I got too attached to a particular bias or something along these lines, or I just got in too early, for example, a lot of the time. So yeah, I hope that answers your question. It feels like just self-analysis that matters for the edge to be bad. Self-analysis is important, and self-analysis is part of your edge, but there are multitude, just as we had Lance on last week and Umar on last week, who both shared really great insights into A+ setups and identifying edge, is there's multiple layers to having strong edge. Self-analysis will be one thing, and understanding yourself. Did I press the mute button in time? I don't know, because that would have, anyone wearing headphones would have been blown away with that. Wow. Anyway, there's multiple layers when it comes to edge, right? Yeah, there's multiple layers. And what I mean by that is it's not just self-analysis. That's very, very important, but it's also your technical ability. It's also going to be, things outside of your trading in terms of how your routine is set up. It's also going to be in terms of what's in play within the markets. What's the current theme and volatility within the markets. All of these factors make a huge difference when it comes to having edge within the markets. Randy is almost going to be with us, by the way, guys. Does your self-worth rise and fall with your P&L? It shouldn't, but when you are a beginner and when you are finding profitability, I can see and I felt why it felt that way very early on in my career. It was very easy to feel that way of attaching your self-worth and yourself, how you feel about yourself towards your P&L and how you're performing. But the reality is no, right? Your self-worth has nothing to do with your P&L. Your self-discipline a lot of the time has a lot to do with your P&L. Your work ethic comes down to a lot when it comes to your P&L. Those other things matter a lot more. Your self-worth should not be attached to your P&L, though, like I said, when you are a beginner, it's so easy to do that because you are trying so hard. So you feel like you're trying so hard, but it's not getting anywhere. But a lot of the time, if you really took a step back and looked at it, most of the time, you'll realize you're not trying actually hard. You're doing a lot of effort in the wrong things, of like just being on the charts, for example, or just turning up to a webinar, for example, versus actually going deep into your technical ability and your gaps in knowledge and things you struggle with. Also, a lot of over trading probably taking place versus having to step back and creating rules and systems that are very, very important. So Mondays are going to be interviews with top traders and financial experts. We'll be live trading, yeah. Well, we're looking to expand out the live trading. Obviously, that's the main focus. I'm just doing this as we launch Chart Fanatics Live. I'm happy to do it. I enjoy it a lot. But, if we have more live traders that will take the Monday slot, for example, and Friday slot, then it will be a week-long live trading. But yeah, to answer your question. But we will have incredible guests as well. Talking of which, we are going to be joined by the one and only Mr. Rande Howell in just a moment here as he joins the live stream. Oh, it is it is the one and only Mr. Rande Howell there. You can see the people clapping. They're not actually clapping, but I made that happen for you there, Randy. But I know they are in the live chat there. I'm just going to get you set up. But Rande Howell, for everyone who has just tuned in or doesn't know, which I would be shocked by, especially considering we just did an episode recently on Words of Wisdom. But regardless, Randy has been around for a long time within the industry and is a world-renowned trading psychologist and performance coach and has done incredible things. And here we are now with Rande Howell. You can see him on screen. Randy, how are you today?
I am quite well today, Riz. Quite well. And glad to see you. Yeah, I always enjoy your smiling face and inquisitive mind. So
thank you very much.
It's exciting.
Randy. It's always a pleasure, honestly, a true honor. And thank you for being here with us today and taking this time out. Just to, as always, I provide value to the trading community and the audience. No doubt we'll have questions from the live audience with us today. But just to kick things off, I would love to just ask you in terms of I don't know, we didn't really discuss it really on our podcast, funny enough. But there's a huge phenomenon in recent years, I'd say probably especially over the last 5 years, within the trading community for mainly the futures and Forex side of trading, which are these funding challenges, right? And I won't go into too much depth of like what they are, etc., but they're an opportunity for traders to get leverage and access to capital. But there's one element I wanted to ask you about specifically, which is what would the pressures of having a profit target do to a trader?
Oh my God. First of all, the business model of these things make a lot of money because what happens is traders really want to get funded. They see an opportunity to start trading with a $100,000, $200,000 account and all that kind of stuff. And they go in and it may take them 50 or 100 times to finally meet the challenge. And then they finally do. And then they blow it and they end up starting over again. It's a cycle. And I've worked with a few of the firms and, ultimately it still comes down to the trader has to be able to get his act together. He has to become emotionally literate and understand how to use emotions. They're going to teach them this is the technical knowledge that you need. But ultimately what they're really missing is how do you teach them to be able to stand up to that challenge? Because ultimately, think about it. You're sitting there and you're going, all I am is this far away from being a funded account. I'll be a funded account. Yeah. My dreams. And if you allow that kind of mindset, it will pollute the mind you need for trading. So my own view is that it's a very good business model for the companies.
Mm-hmm. That's true. It's true. And you know what? This is an interesting one because it is true, but then equally I do see why traders go for it because of the leverage that it can provide them, which is great. And we've seen traders, I've known traders personally who've done very, very well from them. However,
me too.
What would you say? So what should traders do when they choose to put themselves in that environment, right? So when they're putting themselves into this environment where they're adding these layers of pressure from having actual physical targets, etc., what would your recommendation be for those traders who are putting themselves in that environment?
Well, the very first thing is recognize that you're going to have to change. And the very first thing beyond that is say, what I can do just by my breathing and my breathing alone, I can give myself an edge. If you're diaphragmatically breathing and you've trained yourself to diaphragmatically breathe as you're trading, not on a guided meditation, not just in a yoga studio, but actually in the combat of trading. And if you get to the point where you're saying, okay, I know that air has to go into my belly, it has to expand, slowly release. What you'll do is you'll take a lot of that pressure off. The emotion doesn't have the chance of just taking over and overwhelming you. And that would be the very first thing. The second thing is that if you actually have a time where you have been in pressure and somehow you found the ability to land okay, Riz, that can be mined. And I actually, a chunk of my work is built around taking the way the brain takes experience and builds it into memory. I manipulate it so that you're able to get to in that memory a time where under challenging moments you were disciplined, you were courageous, you were able to calm yourself down, and you were able to have clarity of thought. If you can come to that memory, what it's called, it's enrichment. You pull that up and you start living there. You start saying, I can do this. I know that it happened. This is not visualization. This is not having the affirmations of a lifetime. This is literally recognizing, going to memory and recognizing that this state of mind did exist under a challenging moment.
Yeah.
And Riz, that makes all the difference in the world because all of a sudden, it's really something that happened. It's not make-believe. It's not something you wish for. It's something you have been there and done in the trenches.
Yeah.
That it would be one of the biggest things in the world. And of course, I can train you on something like that, but you get the gist of it and understand you're going into memory. You're finding a time where you probably had a completely different way of remembering it. Okay. But the thing is when you look at it and go, something, My brain organizes experience into memory. What I'm doing is I'm changing the way the brain organizes the experience to have a different memory that I can feed into.
Mm-hmm.
And in acting, it's called method acting.
Yes.
Okay.
Definitely. No, I love that. And what a way to tie it together, because a lot of people would understand exactly what that is. And it's such an interesting one because, as a lot of people come into trading, they learn that you shouldn't put pressures, you shouldn't pick profit targets, etc. Yet nowadays, most traders are electing to go down that path, understandably so. But they should also understand under that opportunity comes different risks and different hurdles and adversity that comes with it. And therefore, as you're saying as well, being able to recognize that and actually take that on board to be able to then adapt accordingly. Now, one thing that I find interesting, and you already just mentioned a bit of it then before, within 5-10 minutes of starting, which is trading psychology. When people hear that, most assume mindset. But how much of trading performance actually goes beyond just the mind?
Riz, this thinking brain of ours, this mind, is servant to our emotional brain. There's a saying in emotional intelligence work that all thinking is emotional state dependent. So right here, you're turning. In cognitive behavioral therapy, they have the idea that thought comes first and everything else cascades from there.
Yeah.
In emotional intelligence work, it's the exact opposite. It starts with emotion, and then thought is an electrical behavior that comes out of the emotion interplaying with the environment. So it's right there, is that if you grasp that this is something where the mind is created from emotional programs. Have you ever seen it's a kids movie, Pixar, Disney, Inside Out?
Yes, I love that. My daughter loves it. I love it as well.
Well, I'm going to tell you something. They spent a lot of money with neuroscientists because what they want to do is they wanted to represent thinking and what happened. And when you see the little girl, she's going through all the distress and stuff like that.
Mm-hmm.
You see all these emotional programs just going nuts inside, and they're all struggling for the control of the self. And that's the way it works. You have emotional programs. I often call them archetypes.
Yep.
That have become habituated and fire under certain circumstances.
Yeah.
And what you can do is you can begin to say, okay, the mind then is really connected to the emotional cocktail that I'm creating. And out of that cocktail comes the kind of perceptual map that's probably what most people, when you say my thinking, my thoughts, is actually it's perceptual map. Because you're going, I know that I have to have discipline. I know that I have to have courage. I know that I have to keep myself calm. And I know that I have to think clearly.
Mm-hmm.
Those are emotional programs. And again, you can learn to pull those up and you get a certain quality of thinking. And most people don't realize that it would be abnormal to think that you can do it that way. It is so seductive to believe that the mind's in control.
Yeah.
And it's not.
I'm sure a lot of people, it's interesting you mentioned that, because I think a lot of people, the way they describe their psychological issues that they have is just that they blame the mind. They describe it, and I'm sure you probably heard this countless times, is they describe it as the mind taking over. Like the mind has taken over control, and that's why they are not disciplined. That's why they're making these impulsive decisions, but like almost as if they are being used by their mind, right?
The mind makes a great servant. It makes a terrible master.
Mm-hmm.
Okay, that's Albert Einstein. Okay, or it's attributed. I think I found out that it's attributed to Einstein.
Yeah,
and that's good enough for me.
Yeah,
okay?
I'll take it.
So the deal is the mind is an afterthought. If you were to look at an emotion as a locomotive, okay,
yeah,
and if you were to take a look at the engineer driving that locomotive, that would be your beliefs. Attached to it is this little car at the very tail end of the train. That's your thinking. It's along for the ride. It's not producing. And if you begin to look at it that way, you begin to say, you know something, I need to quit trying to force emotion. I need to need to learn how to regulate its intensity and to be able to create emotions almost at will, okay, that give rise to the mind that can trade. Because I can promise you, the mind that you brought into trading, unless you won the genetics lottery, is not capable of trading.
Yeah.
That mind that brain and mind was created minimally 6 to 8 million years ago, when our ancestors were coming out of the trees and discovered that there's a whole bunch of predators really like us a lot. And we learned how to think anxiously. It helped us to assume that there was a saber-tooth tiger behind every bush they saw in the savannah, when in fact only 1 in 10,000 were there. But it worked for the species. So we're automatically going to bring in a mind that's already a negative assessment machine. It's already wants to be in control of outcome, which is not possible. And it's going to not want to see flaws in its thinking.
Yeah.
That's not you or me. That's just the human condition. And so when you're coming in, you're thinking, I really need to go about retraining the way my brain interacts with uncertainty. I'm not saying the way it learned in the first place is not a good thing for that time and that place. But if you're managing probability and that's your job as a trader, then you're going to have to reroute the entire way that your brain engages uncertainty with risk in it, and how you can build that mind to stay strong, to stay solid, and to make decisions from that, rather than all these little, what happened to my mind? Where did it go? What did it do? Yeah.
Would you say a large part of that then, as you've already said and pointed out, is that, ability to be more self-aware and to identify causation, identify when these emotions that are trying to take control and why they're happening, what is the correlating factor over time that is causing fear to pop up or greed to pop up, etc.
Well, first of all those, even greed, it's not there if it weren't useful to our survival. Okay. And that's just the way it works. So you're getting there and you're saying, okay, they're popping up. There is a host of emotional programs. And it just so happens that we grew up in a very dangerous world way back then. But Riz, I don't know about you, but I don't see any lion, tigers, and bears. Okay. Out and I live in the rural area, and we see wild animals, but we don't see ones that are hunting us.
Yeah.
So it's just a different in perspective. And I guess the other thing that with that, it's the decision to produce a patient mind. An analogy I like to use is there is a apex predator in North America called the cougar.
Yep.
And a cougar is a lion. They tend to be about 225, 250. And they do not chase their prey. What they do is their main diet is the white-tailed deer. And what they do is they climb a tree, get up 20, 25 feet, and they sit and if you were to see one in the woods, you would think he's just being lazy. He's just sitting there chilling out. Well, actually, no, he's patiently waiting for the deer to show up and to set up. The cougar knows what the communication trails are that the white-tailed deer are going to use, and he sets up alongside where one's going to have to come by. And then when that happens, it will drop 20 feet. And with the luck, what it's going to do is snap the deer's neck. And so it falls down dead. Okay. If things don't go right, it gets up and runs away. The cougar does not chase. It's a loss. He climbs back up the tree because what he knows is that the forest is going to provide more opportunity. That's how he's built. And what happens is that is the model that I ask traders to start equipping themselves to be like. I don't know if you've ever been around a cougar, but when you're around them, they are a wolf. A wolf pack will not attack a cougar. Wow. They are formidable prey. But the thing is that what they also know for their survival in the dense forests of North America is sitting up in the tree waiting for the white-tailed deer to show up in the trap, and then ambushing him produces an enormous amount of success. If you take a look at the African lion, where they've developed on these big, huge plains, chases and all that kind of stuff, is those lions get gored, they get kicked, and they have a high turnover. They have to constantly replenish the capital, the lion capital that can go chase. Now, they've found a way for it to win, and you can certainly do that in trading too, okay? But if you take a look at day traders that I work with, is that no, really, when it comes down to it, they need to become cougars. They need to become cougars. Yeah. That's the mind. And if you notice, it's very much rooted in patience. They practice the patience.
No, that's one thing that I really enjoy in our conversations, is being able to take these, not only analogies, but also things that you find in history, in nature, that are so applicable and so relevant to today, and I believe hold a lot of truth, personally, and just from my personal experience. When I reflect on our conversations and reflect on these things, you can start to identify, a lot just from your own personal life, not even in trading, but especially from the trading as well. Okay, this is an interesting question from the chat here, and someone said they had a good question before that. Let me just make sure I don't skip over that. Here we go. Yes, this is a great question. What do you think has impacted most to the development of traders in recent times?
First of all, I think it's the way TA has evolved, and suddenly it has become a real science, to the point where if you follow your rules, you know that the edge is going to be on your side, and eventually you're going to extract more capital out of the markets than you put back. You no longer have to gamble.
Yeah.
The key is, as I look at it, once you have your TA down and once you really know how to create an edge, the moment that you go outside of your rules, you're no longer trading, you're gambling.
Yeah.
Okay. And I would love to think that what traders are really learning is the value and the need for personal development of the mind. Whether or not we call it trading psychology or what, the thing is it requires a concertedly strong effort to be able to develop a new way of habituating your response to uncertainty. And I see that it's improving. I see that people are developing that. And what I really, truly would love to see, particularly with people like me, is that they start really learning more about emotional intelligence and neural biology and meaning, the way meaning, belief gets wired into substrate, into circuitry, and to begin to recognize that neural circuitry takes effort. Okay, it really takes effort to start changing. It's not like being an electrician where you just rewire something, take the wires, oh, those wires don't work. This is actually when you actually go in and you start habituating a new response, and you reward yourself for the way you're responding, but you're also acknowledging the fear of losing, in particular, the fear of needing to like make a lot of money and to prove yourself and stuff like that. I wish more work were shown on this. Is really about performance. It's not, and particularly if you're trying to prove yourself, trading is a wicked teacher. It is. Yeah.
One of the best out there, if anything. Like I've always said that trading will put a mirror in front of you.
Yes.
Put a mirror in front of you, and the ones who do succeed are the ones who look at that mirror and start to identify and try and recognize the flaws and the weaknesses.
Yeah,
and the strengths
instead of denying stuff.
Yeah.
You're actually saying, "Oh my God, thank you," because that trading account, the way I look at the trading account is, it's your best friend. It's telling you exactly the effectiveness of the beliefs that you hold about managing uncertainty.
Yeah.
It's telling you how effective the beliefs are. It's not making an assessment about a good or a bad person you are, manly or whatever. It is telling you that at the very core of an emotion is a belief.
Mm-hmm.
Okay. And if you get that, you're going, I need to spend some time really finding out what makes me tick, because it's going to find me anyway. And I would rather find out what it was so I can correct it and master that part of myself than to sit there and to deny it and finally come to the moment of where it's destroyed most of my capital.
Yeah.
And Riz, I probably get 10 or 15 emails a week saying, I wish I had found you a lot earlier, but I've blown all my capital.
Yeah.
And can you spare me a dime? And no, I can't. It's endless. But the thing is, they're not willing to learn until it's too late.
Yeah.
And what I wish for traders is that they really take on an understanding that this is going to require self-development of a very different way of engaging life than the way that they have before.
Definitely. Someone asked an interesting question here, Randy, actually, which was, there you go. Do you think identifying your emotions during a trade is more important than identifying the trade itself?
I don't want to put that as a dichotomy.
Mm-hmm.
I would actually say is that you have to have method. You have to be able to think under pressure and see what your charts are telling you. Okay. At the same time, every moment that there is a change in status, anything in your chart, by definition, there is an emotional triggering. And I'll say that another way, is that an emotion can be defined as a change in status of the status quo. So if you have a chart sitting there and it's just telling you the good news and all that stuff, you're pretty much running like that. But the moment that, say, it goes against you and your chart's telling you that, by definition, an emotion is going to erupt. And the key is that you need to be at a point where you can actually spot them as they emerge before they get ahead of steam, before they take over mind and become a bulldozer in your account.
Mm-hmm.
So I would actually say it's really both, because if you don't have a technical background, all the trading psychology in the world is not going to help you.
Mm-hmm.
But as you develop and actually have a quantifiable edge, and you see that you're not extracting capital on the level that you think that edge should be, then you're looking at it and saying, what is it about me that is causing this problem? It all comes back down to the brain simply doesn't learn from success. It learns from failure.
Yeah.
And the thing is there's going to be plenty of failure in trading. And the real question is that, are you asking to learn from it? Or are you going to sit there? And what I hear all the time is traders will get together and they will talk the game of what if,
Mm-hmm.
what if this, what if that, what if. And to me, what they're doing is they're talking themselves into just creating mind games within themselves. The key is I have a friend who is an incredibly good trader. He teaches, and when he first came along, and David is a large aspect, particularly when he was working in New York, he was an intuitive trader, and he was very good at it for some reason. Okay, and in his groups, he does not allow new traders or inexperienced traders to take intuitive trades. There's only a small subset of the people that can. And then one day he called out an intuitive trade, and everybody knew who could go in and could not. And they went in, and David ended up out in 5 minutes. Okay. Took a small loss, went on. Mm-hmm. And the next day, the other guys came in and says, "Oh, David, you really blew it, man. That was the one of the month." Blah, 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 blah. And David said, "What are you talking about?" And he said, well, if you'd only stayed in, blah, blah, blah. And he said, look, it didn't meet my criterion. I got out. That was the end of the story. That was all. That's the end of the what if story with this particular trader.
Yeah.
All the others guys, they just ramp it up. And I mean, you've been around them. Whoa, this, that, there. And the real question, what do you learn from this?
And that process is so important. And to your point, though, I don't think, there is to that question that was asked, like there isn't a one answer is more important than the other, because you can have, as you said, the psychology and have more of a control of your emotions. But then if you don't know how to generate trade ideas in the first place, that skill set is then wasted because you won't need it. But by having that skill set of the trade ideas, then of course you definitely need to be able to have a handle on those emotions to be able to execute effectively, and more importantly for longevity. Because I think a lot of people mistake profitability with success in trading, when in reality there are many profitable traders who can have a good month, quarter, a year even. But most people who come into trading aren't trying to just have a good month, quarter, or a year. They, when they come in, they have the intention of doing it for a career. And to do that, you have to be able to, manage your emotions and be able to manage your process and follow your process to a T. For the most part, not everyone. One good question for you, from the people you've worked with who are profitable, and have had that longevity, do you get to see insights of the reality of, their strike rate and record of following their process? Meaning, do they still make little mistakes? Do they still make mistakes, even if they are these fantastic traders who follow their process the majority of the time and overall profitability?
Of course they make mistakes. Human beings are just mistake-prone entities. At the same time, if you look at it, there's an assumption there mistakes are bad. From my standpoint, I don't see it that way. I see mistakes are the natural process, and they become opportunities for growing something new. And if you start noticing, it's easy. If you take a look at an athlete like LeBron James, he has a process that he goes through to get his mind right for playing the game, and he also has times where he takes breaks and he's in the game and he takes a break. He's able to recenter, and occasionally he still makes mistakes. But if you look at LeBron James versus that, say, like a Michael Jackson, Jordan, I'm sorry, wrong thing.
Yeah.
Michael was showy, man. He was fun to watch. I used to, until I really began to read more about LeBron, is that I just thought he was a really boring guy. I mean, the ball was just swishing, moving through his hands, and occasionally shot, but it was just moving all around. And I thought, well, no, he's a Zen master.
Yeah.
But he's at the same time, he occasionally makes mistakes. And to me, that is the guide that allows you to get outside of your arrogance. Again, if you start winning and doing it all, you can't help it. You're human. You're going to fall into feeling good, overconfidence, and stuff like that. Small mistakes help you to recognize that it is true, is that the price of freedom is eternal vigilance. And you got to stake that, because it's easy to get lazy. It's easy to say, I got it. I have that problem, and staying humble.
Yeah.
When I'm doing well is very challenging.
Yeah. I feel like one thing I picked up on and learned early on in my career, it was outside of trading, funny enough, but it was in terms of like the law of polarity, and understanding that, the greater we feel the negative emotion and that negative state, the greater we will feel the positive state and that positive emotion, and we will constantly oscillate between those two polar opposites. And only until you start to be more aware of those emotions and those emotional states will you start to, not that you won't feel, because it's not a case where you shouldn't feel good and you shouldn't feel bad, right? I think that's the misconception that happens when people try and say, oh, you have to be emotionless when you're trading. But
which, by the way, is impossible.
Exactly. And as we discussed in our podcast, emotions actually serve us well. and allow us to achieve success and achieve what we are desiring to achieve as traders. But it's being able to, as we talked about at the very, very beginning, that, if emotions can either be a master of us, which is very dangerous, or we can be more of a master of them and at least be more aware of them. And that helps. That just raises the bar so that when a negative state does happen, you don't feel as strongly negative as you potentially could have. And same on the positive side. And you feel more centered, more balanced, more understanding. And I think that makes a huge difference. There was a great question here, actually. Great question here, which was, can we create these new habituations through day-to-day routine? And what way would you suggest? So, is there a way to create these, habits in terms of our psychology, on a day-to-day routine basis?
Yeah, you're doing it all the time. Wilt Chamberlain once made the comment, be very careful about what habits you create, because once they're created, they're going to be creating you. And, out of that, I look at that and going, we're always in a situation of what is the best mind for me to bring into a moment? Mm-hmm. And it just so happens that I want to have a very curious mind. I want to have a sense of curiosity to explore deeper and deeper and deeper. And so, I practice curiosity, and actually how to habituate it. I'm going to give you an example from a number of years ago. I was reading where this Wall Street executive was on a plane, and they got on the tarmac, and suddenly there was time delays. And before you know it, they'd been on that tarmac for 4.5 hours. The airline had done something really stupid. They gave them alcohol. So among everything, it just got ramped up. And this Wall Street executive was getting all ramped up and stuff like that. And beside him was a Buddhist monk. Mm-hmm. And the Buddhist monk has a little pumpkin suit on and stuff like that. And he was sitting there, just this smile and contentment and stuff like that. And it just pissed the executive off royal. And he finally looked at the little monk and says, "What are you doing?" And the monk looked at him and says, "I'm practicing patience. Right now, I think it's the best thing that I know how to do." Mm-hmm. And in the same deal is that in trading, I encourage people to practice the mindset they're bringing into trading and just say, something? What do I know about this mindset? First thing is you should know that it's good for only about an hour and a half at a pop. You drain the glucose out of the brain. You start fuzzy thinking and stuff like that. And so the first thing is I need to take regular breaks rather than think I got to push deeper and deeper, faster. Mm-hmm. And then you go, well, what happens is I also need a practice of, if I know, and again, in the work that I do, I'm looking for a trader to become competent at pulling up discipline of a ruler, the ability to maintain order under pressure. Not just not just something that'd be a nice idea, but no, something that you battle test.
Yeah.
At the same time, I'm looking for them to pull up the courage of a warrior. You're always gonna, hey man, you're putting capital down and risking, and yeah, you have an edge, but you don't have certainty. You need that part of that mindset, and then you also need self-soothing, self-calming, like this Buddhist monk was doing. And at the same time, you need critical thinking, the clarity of thought that allows, and I call that sage. Those are 4 emotional programs combining into a mindset that you're intentionally habituating to show up as you trade. That, whether or not it's a trader who has gone through a line of things like that, like a LeBron James type, or whether or not it's someone who has just fallen into how to keep a mind straight, mm-hmm. You have to practice it, and you have to reward yourself for following the habit mm-hmm. until you see it. And it's called myelinization. That's when you insulate it, and you start from when you first start building a habit. It can't take much pressure at all, but as you keep practicing, it starts insulating. And there'll come a moment when it becomes what is known as a hot circuit. And that hot circuit has become instinct.
Mm-hmm.
It fires automatically. And you want the good guys to show up automatically, not the bad guys.
Yeah.
And Riz, it can be trained, for God's sake.
I think a lot of people are always in search of the easy hack to success / trading success. When in reality,
there is no such thing.
Exactly. Regardless of what it is that you look for or what it is that you do, there's always going to be work that is required, always, and that cannot be ignored. Here's an interesting one. It's more of a specific question / observation, which is, they say, I've been struggling for the last 5 years and I've been back testing, but I keep on not having confidence when I'm trading. What should I do to gain confidence?
Face your demons when it comes down to it. First of all, directly about the confidence is that if you were to think about, well, what does confidence really look like? In my line of reasoning, I call that the discipline of a ruler, and I call that the courage of a warrior. And what you're doing is saying, how do they build confidence? Is if you take a look at a person building a skill, is at first they're beginners. You locate where you are, and in a particular case like what you're talking about right now, I would call that level of competence bull in the china shop. You don't know why you're blowing up. Mm-hmm. Okay. But if you're looking at it and saying, I'm blowing up, I've been doing this for I've had them do it for 10 years. Okay. And you're going, okay. And I know that I have to declare where I am on a competency scale. I have been sitting here in la la land for a long time, but what I want to do is declare myself a beginner. In this particular case, there's a high likelihood that he'll find the lack of confidence is he's got a dollar figure attached to his net worth figure, and his worth as a human being figure. I've had people, whether or not it's $100,000, $500,000, $10 million, they have a sense of their personal worth as it's worth in trading. It's worth this amount of money. And the moment that you hit that figure, the habit that you form probably in childhood is going to take you back down to the older figure. And you've just been oscillating between that. And that is where you're going, okay, I've gone from being in la la land. I'm a beginner now. And I realize that this probably has something to do with the way my mind built how I could survive best in my family of origin. And it just so happens a lot of times, like, for instance, I grew up in a family with, my father was a retired colonel, and he was a high-ranking DOD official. He ran a cargo jet during the Vietnam War. And there was no room for a budding new ruler in our house. You'd get yelled at and screamed at. And finally, what that boy, with me as a kid, learned is to push that part of himself away. And it wasn't there anymore. And when I was first doing my work 25, 30 years ago, when I first started trying to call forward that emerging ruler, he didn't want to come. The habit had him back. But what happens is, I said, no, this can't work. I need to go and find that part of myself. I need to nurture it. I need to strengthen it. Because if you haven't got discipline, don't trade. But that's where your confidence would come from. And you start finding examples of where you have been confident, where the performances reveal that you can be confident. And again, you're training it from real experience, not by visualization, not by affirmations. The key, though, is always here is when you're doing stuff like that, is that visualizations and affirmations are going to break down under stress. Okay? And what you're looking for is something that really did happen. So that when you're really put under the test, it doesn't fall apart. You go back, no, this happened. This is in me. It may not be manifesting right now, but I darn well know it's there. And if you know it's there, you can find it. I don't know if the guy, does that come close to answering your question? Let's see what he says.
definitely. We'll wait for his answer there. But I believe it does. I believe it does because at the end of the day, like, you could easily just say, oh, master your technicals better, or backtest more, or collect more data and reflect. But in reality, that stuff's helpful. Of course, that can aid. But as you said, like, you have to find it within yourself, especially within trading.
You can find in backtesting, you can find if you have an edge or not, but whether or not you have an edge or not under the gun is a different thing, and that's where you really find out about yourself. And again, for me, he's looking at a prime opportunity. His account is telling him there's a problem, and we're calling it confidence.
Yeah.
And the deal is what's blocking the ability of growing the confidence.
That's it. And I think it's much deeper than people assume. I think when it comes to performance as a trader.
I promise.
We were talking last week with a couple traders on here in terms of edge. Like, how do you identify strong edge and identify A+ setups, etc. And they were highlighting just how most people, when they hear that, they would assume we mean technical ability and what do you see on the charts that allows you to then have this edge. But they were reflecting on the fact that there are multiple levels and filters to edge in terms of even just how you feel on the day, in terms of your daily routine, in terms of how much sleep you're getting, in terms of even just what's in play within the markets at the moment, right? All these things factor into edge, as well as then obviously I would say you have a separate folder altogether of mental edge, right? And what
yes, absolutely
is included in there. But I did have another question here, which is, how important is a trader's time horizon when it comes to longevity / results? So even if a trader is focusing on their psychology and their emotions, or even if they're working with yourself, for example, or even if they're learning their technical ability, how important though have you found that a trader's time horizon, like how they observe like success and when they observe success and implementation of things, how important is that in terms of success overall?
Well, it's really huge. The way I understood that question was that you're attracted to trading always for personal freedom and for financial freedom, and you fall into it, and you really are not looking at what is required to produce a successful mind. And I recently had a guy says, Randy, I realized that I'm not going to invest any more money in myself as a trader. I've already got 12 years into this thing. I've plowed through a lot of my net worth. I've had enough, and I'm moving on. Now, that's the time horizon of saying, is this when is enough enough?
Yeah.
At the same time, is that I think it's a really good plan for a trader to say, if I have, and I know very few people who have got into trading, and usually it takes 2 to 3 years to get near profitable, and takes 5 years to really decide whether or not you're going to actually do this or not, or whether or not you're going to stay kind of in the mix.
Yeah.
And if I were starting out, or no matter where I was thinking, I need to start drawing a line in the sand about whether or not this is a profession I can do. Because the truth is that I once had a trader, a really good trader, tell me this. And he says, something, Randy, it's a crying shame to try to force a perfectly good entrepreneurial mind to become a trading mind. They're different animals. And in this particular case, it was about a guy who had been trading for 6 years. He had a lot of cash on hand and thought he was going to go in because he was a very successful serial entrepreneur. And, 4 years later, it's not happening. And he works with me, and he finally comes to the moment where he became consistently profitable. And then he says to me, Randy, I want to thank you. This is the best money I ever spent. I know I could be a successful trader, but the truth is I want control, and I'm really good at it. And I'm going to go back to being an entrepreneur. And I look at that and going, I think that was a very bright man. He gave it enough time. And then when he got in, he thought, I have an enormous amount of cash on hand. Trading is a capital intensive business. I've got that. This is going to be easy. All I have to do is figure out how they run this business. And he didn't realize that the very thing that made him a great entrepreneur was going to hold him back as a trader. Yeah. And he chose entrepreneurial. And I don't consider that a defeat. I think that's becoming wise about, what you are and what you're good at and where you need to invest your energy.
I think so too. I think that being able to reflect on, I think there's a lot of traders who might find themselves in the same boat actually.
Sure.
In terms of making a reflection and understanding where they're at, how much time they've given themselves, and if trading, because a lot of people come into trading with the wrong idea in the first place. And if that doesn't change, because I originally used to think like if you want to get into trading just for the money or the lifestyle that is promoted, then you shouldn't be a trader. But equally, a lot of people, like even I, got into trading because of potentially the money. But I did have a passion for just the description of trading. But even then, it was still like, okay, you can make a lot of money from this. But I stayed because of the passion of the markets, the challenge that the markets and trading brings. And I think that's necessary. And I think if people don't find themselves sort of restructuring their why around trading, and they just keep it around, what might have got them in, which is absolutely fine. That's how a lot of people find trading. Then they should do that reflection. They should do that deep reflection. It makes a huge, huge difference. Randy, I would love to stay with you, as long as possible and forever if I could. And
Well, that's very personal. I tell you.
But I mean it, Randy. I love spending our time together on the podcast when we've had calls today. Even I'm very much looking forward to seeing you shortly in the future, in the coming months, once again. And your value to the trading community, not only here on this live call, but through the podcast alone, and everything you've done before that as well is definitely felt. And the amount of feedback that we received is absolutely incredible. And it's all down to the amount that you're willing to share and the amount of help that you provided, all for free through these endeavors is absolutely incredible, Randy. And
well, thank you. And it's I love doing this.
I can tell, and it's felt as well, and I'm sure that everyone else has really enjoyed your time here today, and we'll hopefully have you back again sometime in the future.
Cool.
Definitely. Randy, we'll see you again soon. Take care.
Be well.
We'll speak soon. Thank you.
Be well.
Take care.
Bye.
Bye. So there you have it, folks. That was Rande Howell. Once again, an incredible, world-renowned trading psychologist, and a true honor to host him here on Chart Fanatics Live for our second live stream with myself, doing incredible interviews with some of the best in the entire industry. And we had obviously a market wizard with Chris Camillo. We then had trading psychologist / performance coach Rande Howell, and then next up we have Peter Brandt, another market wizard and a 50-year trading veteran, coming up. So make sure you have your questions locked in and ready for him as well. What did you think to that? There were a few questions there, I won't lie. There's a reason I didn't ask some of them, because they were trading questions for traders, like this, like what truth about yourself is trading exposed most clearly, for example. It's a good question, but not for Randy, because Randy is obviously a performance and psychologist. Save that for the traders. So just letting you know, try and make sure that your questions are relevant to the guest, and I will always do my best to ask them accordingly. But yes, thank you all for tuning in. We're still here. We still have one more guest to go. Like I said, Peter Brandt, very, very vocal when it comes to prop firms. So it'll be very interesting to hear his thoughts around that. You make sure you have your questions ready, because it's going to be so important, to be able to get the most out of this, that you ask your questions that are going to help you become a better trader, because that is the goal at the end of the day. That is our focus always, of like, how can we get you to improve as a trader? There was one question, actually, someone someone asked a question in regards to, is it more important to have your trading psychology or your edge, or something along them lines? Remember this, and we spoke on this. Trading psychology is important. However, if you do not have a trading edge and you have not done the work to build one, then trading psychology is useless, because without an edge to actually try and trade, and to try and follow, and then finding out that your psychology is poor to follow this, then you have something to work on. Now you've identified a gap. But if you have no edge, then you can't blame psychology or look to psychology to be the problem, because you're essentially gambling if you have no edge. That's the whole game. The whole game is that you have an edge and you're trying to follow it. Now, the problem comes as a psychological problem is if you struggle to follow a well-defined, profitable trading edge. So make sure you always remember that. Make sure you always remember that. Backtesting versus live markets. Good question. Good question. I was never a fan of backtesting. I'm still not a massive fan of backtesting. However, it is beneficial. It's beneficial to collect data. It's beneficial to practice. However, the negative side of it is simply just that people do put too much emphasis on their backtested results, right? So they will put a lot of emphasis on their backtested results. So let's say their backtested results gave them, a 70, 80% win rate. But then when they're trading live, they're getting a 30% win rate. They will constantly lean on blaming anything else but their backtested results. And they'll say, but my backtest, but my backtest, but my backtest. But that doesn't matter. That was literally in a previous environment, not live environment. That is you allowing yourself to collect data. And your bias and your viewpoint and the fact that you might have seen the price already. And you could say if, but, when, I might have done this, might have done that. But that's not the live market. So again, it's beneficial to practice. It's beneficial to collect data on an edge, but live market conditions are always going to be more factual, more reliable, because everything's in play, right? And because you can't fake if you're going to do this, would you do this, etc. How would you add the liquidity concept from the vid with SMC? Best person to ask is Marco. Marco will be trading live tomorrow, so make sure you tune in tomorrow. That is actually at the market open, so 9 a.m. Eastern time, right? 9 a.m. Eastern, he'll be live, so make sure you bring that question to him. Best person to it, right? The liquidity trader. He will tell you exactly how to do that. Question. Hey Riz, I know you have achieved over 80k in profits. What advice can you drop for someone like me, please, as an upcoming trader? So that 80k in profits was just over the last 2 months on CFD prop firm. What would I advise you? Did you say new trader? Upcoming trader. What I was just talking about is the biggest thing. It made the biggest difference to me. Really focusing on edge and building an edge. What does that mean? When it comes to the technical edge, we'll start there. So technical edge, you have to do the work necessary to identify your system that you're going to trade. So that starts with, okay, are you going to scalp, day trade, swing trade? Okay. After that decision, what are the technical confluences that you're looking to use and have identified in the market yourself or have learned from someone else? Now, when it comes to learning from someone else, it's important to make sure you learn from someone with verified results. So that means that when you are trading this system that you've learned, you know it has edge because the person who has taught it to you has proven that it has edge through proven results. Broker statements, track record, consistency of payouts. And when I say consistency of payouts, by the way, guys, I'm not talking about these little influencers who have these deals with crappy prop firms and therefore can show that they make 2 to 3K a payout or whatever. Try and avoid these TikTok influencers, right? You need to really focus on these people who have real edge and are sharing actual edge and value, whether it's on X, whether it's on TikTok. That could be on TikTok, but it's quite rare, to be honest with you. Most of the real traders I know are not on TikTok or don't have a focus on it at the very least. They have their focus on X, where they provide a lot of write-up of value, or YouTube videos where they're breaking down entire concepts. If you want to be able to look at a standard when it comes to who to try and replicate, just look at some of our podcast guests since November of 2024. Like, just look at Umar Ashraf, Lance Breitstein, look at Kyle, as in Jade Cap, Kyle, look at Trader Kane. Like, these are people who show value, some from prop firm funding, but consistency, and some from personal capital. And so, yeah, that's the main point, though. Sorry, I got a bit off track. Got a little off track there. But make sure that you are learning from someone with verified results, actual results. So that's like one step of the edge to build an actual strategy or take a strategy and collect data on it. So backtest data, just look on the charts and then collect data from it. And then live test data and collect as much data as possible. That data then you want to reflect on. So whether you get something like TradeZeller to be able to make it easier for you, cool. If not, no problem. Just make sure you're collecting that data nonetheless, right? Because then you need to reflect on it and be able to look at the win rate. Look at how often that win rate is the average, right? Is that average like a constant, or is it something that fluctuates slightly? Is it that, in 1 week you could have a 30% strike rate following that same edge, or 1 week you could have a 60% strike rate, but on average it's a 45 or 50% strike rate, right? These things matter. Why? The data points matter because then you will start to accept losses more easier. Why? Because you've seen from the data that losses happen. And not only do losses happen, but back-to-back losses happen. Now you're going to get an average. You're going to find out that the average, let's say, for example, of back-to-back losses before a win might be 3 trades. So the next time, when you've done all this work, that is, the next time you take 3 losing trades, it's not going to say you're going to be emotionless, as we just talked with Rande about. The next time you're going to go, okay, I feel bad, right? I feel bad, but I understand why, because I've lost these 3 trades. But my data, my edge tells me that is an average that can take place. Does it mean that you can't lose a 4th trade? Of course you can, because that's an average. Average just means that for the most part across your data, out of say 200 trades, the average losing streak was 3. Yeah, and it might even give you data of the max losing streak you faced in that 200 trades was actually 5 at one point, right? So I hope that answers your question. I'm sorry, I went on a bit of a rant there, but guys, we are ready. We are ready for our next guest. It is an incredible trader, a market wizard, a 50-year trading veteran, someone I respect very, very much. It's the one and only Peter Brandt. We're going to let him in. I did that a bit prematurely, didn't I? I did that a little bit prematurely. Let's let Peter in first, and then we will speak to him. Here we go. Let's get this ready here. This one here. And then we need to switch this one out. And there we are. Peter, what an honor it is to have you with us on our 2nd ever live stream. Peter, thank you very much.
I'm sideways. Is that?
I just saw that. Yeah, I just saw that. What happened there? Let's just see.
I'm still sideways.
Now we are upside down. What happened? It was fine for a second. This is what happens when you live stream. There we go.
Boy, but I'm sideways to myself.
I know, Peter. I don't know what happened there. You were fine for a second.
Yeah.
When you first came in.
Yeah, I'm sideways here. I don't know what to do here, actually.
Oh, it's gone black. Let's see. Let's let that come back up. I will just...
Yeah, I can't get my iPad to balance when I go sideways that in a way that you can see me. I can't get it to balance because my case for my iPad doesn't allow me to go sideways in a way that you can see me.
These are the
it won't stay there. That's the problem. It won't stay there. It's not going to stay there. Okay. Now I'm sideways to me. I don't know how I am to you.
We can see the top half of your head.
I don't really know what to do here is because that's about I'd have to get over on the other side of the room to be anything less than that. Okay. Now I can go on my computer, but it's going to be an echo chamber.
It's okay. It's okay. Give us a moment, people. We're going to sort this out. And I have here, I'm just checking with the team. They're going to help us out.
Yeah, see, I don't know why I'm so large.
It's okay. Let it go sideways for a minute. I'm going to try something for you. Okay, we'll let that go sideways. And then I need to if you just position yourself into the camera, then even if it's sideways, that's fine. And then I'll try and figure it out on my end, Peter. Don't worry. But this is the fun. Look, this is why we got this sound here. This sound here is for when we make mistakes, Peter. Look. That's the sound we use when we make mistakes. That's on our end. But let's try it right here. Worst case, we can always transfer. So let's see what my team said here. We're going to use transform and then flip horizontal. Would that be the one? Nope, I did that wrong. What's that? Transform again, and we're going to flip. What do you say? Clockwise. Oh, we might be onto something here, Peter.
Well, you got me, but it's still big.
It's okay. It's okay.
Well, now it's, yeah.
Okay. That's cool. That's cool. That'll work.
Just have one big head.
I know. To be fair, I could always zoom mine in and then we'll both have the same.
Well, do you want me to switch over to my computer? I can switch over to my PC.
Okay. What might help is just if you lock the rotation on your iPad, it might be that maybe.
Yeah, that's asking a lot. I'm not exactly sure how to actually do that, to tell you the truth.
That's okay. What I would suggest potentially to make it easier for you is if you want to jump out of this Google Meet and go back with my team and then let them troubleshoot, and then we add you back in when they sort that out for you. Does that work?
Well, I could try it on my computer. Do you want me to try it on my PC?
I think, I think jump in with my team, and then they will sort it for you. If you jump back in that Google Meet you were in before, they will sort that for you, Peter. No problem at all.
Wow, yeah, you're asking a lot of me. I'm not sure where I was before, to tell you the truth. Yeah.
Okay, Peter's having technical difficulties, but that's okay. That's okay. Oh, Peter is back. Okay, that's great.
You good?
We
No,
are good.
I'm sideways.
No, don't worry. Leave it like that because I can change it. I can change it myself.
Okay.
Amazing. Where were we? Okay, if I do this one. Wrong thing right there. Wrong thing. I love it now. Nope, wrong way. And we do it this way. Okay, we're on to a winner here, Peter. There we go. We did it. We did it. I'm proud of you. I'm proud of you. I'm proud of us all. Everyone as well at home. Thank you for your patience. We are here with the one and only. We'll do it again. Let's do it right. So, joining us now, our final guest of the evening, a market wizard, a true trading veteran, and an incredible trader, and someone that we can all learn so much from. It's the one and only Peter Brandt.
Thanks, Riz.
There we go. Look, there we go. Peter, thank you for being here with us today. I know. I think are you traveling at the moment? I saw something on your.
No, we're at our summer home.
Amazing.
So, yeah.
Amazing.
I probably sound like I'm in an echo chamber. My acoustics where I am in the summer are not very good.
It's okay. No, it sounds absolutely fine to us. Sounds all good. Now, everyone in the chat, make sure you get your questions ready. I wanted to ask you, Peter, just off the bat, an easy question, but I think is really relevant, especially today with the amount of traders coming into trading. Now, what's the biggest mistake you see traders make today?
They don't know how to control risk. I mean, they way too much size. Yeah. I can't believe the size people use, and I think they're just careless. They think this is all about making money, where it's really about keeping your money. And they're the sizing. I just can't believe the sizing that they use. Then they take too big of losses.
It is unfortunate. I think, do you think large part of that, because I've seen you be quite vocal about people sharing large P&L on online. Do you think a large part of the reason why they incentivize to use larger size comes from people, trying to replicate what they're seeing online?
Well, I think so. Yeah, I mean, it's such, somebody comes out and they're making $10,000 a day. In the first place, I don't believe most of the people that make those claims. Mm-hmm. So, but they make those claims, and for whatever reason, I don't want to question people's honesty. Frankly, I don't believe it. But if somebody else says, "Well, I can do that," if they can do that, then I can do that. Yeah. And they're just trying to make money, as opposed to really building an approach to trading that might last 5 years, 10 years, 20 years, whatever. They're just willing to. There's a gambling mentality. I guess that's the way I put it. Is what I do is I see a bunch of people who are taking it all, and they're betting it all on the line. They're going all in. They've lived in the world of poker, sports betting, and they're just used to taking all big risks. And it's a roller coaster. So, and even the people that say they make it all, even assuming they do, mm-hmm. Most of them are going to lose what they make. I mean, it's going to end up in my pocket or in the pockets of people like me, mm-hmm. who are willing to play the long game, because they're all playing the short game. So it doesn't matter how much you make. The question is how much you're going to keep.
Very good point. And it's actually interesting. Someone on the terms of longevity, someone said, do you believe long-term success in trading is more about mindset and discipline, or about strategy and market knowledge?
I mean, you have to have some market knowledge. You have to know what markets are you trading, and, what's the leverage you're using. How are you going to select trades? I mean, what's your process by which you come in the day and you say, well, I'm gonna trade S&Ps, or I'm gonna trade sugar, or whatever the case may be, or QQQ, or how am I going to determine what a trade is for me? So, but I don't see that there's much edge in that. I mean, I'm a chartist. I've made my money, Riz, with charts now for 5 decades. Think about that, half a century.
Yeah.
I've made my living. I've supported my family. I've built my wealth. I've paid my bills. I've purchased homes. I've paid for college education. I've built a pension plan, and I've done all of that, playing a long game and trying to make it and then keep it. But I got to tell you, my edge is not in the chart pattern. And charts are not where the edge is. Your edge is in sizing. Your edge is in risk management. Your edge is in controlling the head game. The head game, headspace, huge contributor to how a person does over the long term is how they manage their head. And so there's a big psychological aspect to market speculation. And I think a big part of it is risk management, trade management. What's your average loss? What's your average profit? Everyone's concentrated on win rate. I could care less about some of the most overemphasized, overrated metrics. Yeah, win rate, rate of return, Sharpe ratio. Useless. All 3 of them. They're useless. If someone wants to really track their trading, they need to keep track of their profit factor. They need to keep track of their average win size. They need to keep track of their average loss size. And they need to do that using basically the same approach for about 2 years. They can do that for 2 years and collect the data. Then they can begin to understand where their edge is. And once they understand where their edge is, then they can scale it. Then they can go to size. But you don't go immediately to size. You don't develop an account that's big by going to size immediately. You develop it by developing a process and an approach and practices that'll give you the metrics that'll allow you to go to size.
I love that. And so it's that depth, really, and that focus that allows you to make those trading decisions. I think a lot of people, as you said earlier in the first question, are rushing. They're always trying to rush to size up their trades. Let's see here. What do you think is the best, Peter? Breaking risks per trade into a consistent risk, or using a graded risk plan? Interesting. So Do you think consistent risk or dynamic risk?
I've done it both ways. The problem is that I basically don't trust my own judgment. Over time, I think I've done best in trades where I've maybe not had the biggest expectation. That oftentimes trades in which I have the most hope in, the most expectation, end up being the ones that disappoint. And so I've adopted constant risk. When I go into a trade, I risk about 70 basis points. And so think of it this way, Riz, on $1 million, I'll risk $7,000 on a trade. Mm-hmm. And I try to keep that pretty consistent. So it's somewhere between per million, 6,000 and 8,000. Periodically, I'll add an additional layer and go on up to 1% of my capital, or maybe a little bit larger than that. But anyone who risks 3, 4, 5% of their account per trade, they're an accident waiting to happen. People that risk 4% of their account per trade will end up losing money at the end of the day.
Did you ever grade your setups in terms of like A+ setups? And was that something you did?
No, yeah, I do, sure. But I want my metrics to be my grade. I have a sense when I know that I've done a trade and I've done it according to my rules. The problem with grading yourself, you can't grade yourself based on the results of a trade. Results of a trade tell you nothing. You can have a trade. I can have a trade in which I did pretty much everything right. I sized it right. I timed it right. I entered it right. I used the right orders. I managed it right. And then it ends up being a loser. And there can be a trade where I make a foolish mistake. I break my rules, don't apply my rules, and it ends up being a winner. So which trade is the good trade? And so you can't go based on the results of any individual trade or series of trades. You eventually have to go to metrics. What's your expected value? What's your kurtosis? What's your skewness? You have to develop. To know if you've got an edge, you've got to develop metrics over a large number of trades. At that point, a trader can start making intelligent decisions on how they want to move forward, but not until then. Mm-hmm. And so I have a sense when I do something stupid in a trade. I do. And but I'll tell you the reality. I looked at that the other day. Since 2014, I've done about 2,500 trades that I have recorded. I have all the records on them. I'm not sure out of those 2,500 how many of those I could say they were perfect trades. Mm-hmm. That they were perfect trades in terms that they complied with my rules, which are really sometimes quite complex. But there's not one of them where I said, I wish I would have tweaked this rule. I wish this rule would have been just a little different. Yeah. Because you can't do that. That you can't treat yourself that way. And so there's never a trade in which I can say I wouldn't have done anything different. But there has to be trades in which I have to say I followed all my rules to a T.
Yeah. Would you say someone asked an interesting question here, and you already just mentioned it in terms of 2,500 trades logged? Like, how important do you think collecting data is as a trader? How helpful was that to you by having that much trade data? Is it something that you reflect on and go through on a periodic basis?
Well, you look at any successful business in the world that's running a business, they have data. They know what their stock turnover is. They know what their sales. They know what their profit margins. They know by category. They know by product line. How can you run a business without understanding the data of your business? Trading is a business. Now, whether you're trading full time as a career like me, or whether you're toying around with markets in your spare time, trying to earn extra money, it is a business. How do you really even think of yourself as a trader or an aspiring trader until you collect the necessary data that you can use to appraise how you're doing? And, I put out there how many people collect certain data and on Twitter, and nobody replies, a few people do. But it tells me that most people they like to think of themselves as a trader until you ask them what data they collect, and they don't collect any.
Yeah.
they know how their last trade did.
Yeah.
They know how it did this week or today or last month, but they don't know the important data. You got to have the important data. Until you have the important data, you can't figure out what you're doing right or what you're doing wrong.
As someone who's, you're 50-year trading veteran, right? What would you say is there a right? How long does it take someone that's here? How long does it take to see real profitability? What I would sort of add on to that, or kind of change or edit that, would be, is there a point or a certain criteria you would say that then means you are a more consistent, profitable trader?
Yeah, I mean, you just got done doing a wonderful swing through the United States here several months ago. You talked to a lot of market wizards. People need to understand that when Jack Schwager includes a trader in the Market Wizards book, that's not because the trader showed him a screen capture of a profitable day.
Yeah.
Jack is demanding. He wants records. He wants to see tax forms. He wants to see monthly statements. He wants to see annual statements. He wants to see spreadsheets. He doesn't just buy somebody's story that they know how to trade. Mm-hmm. And Jack would tell you that he's probably interviewed now, not counting the book he's coming out with now, somewhere 70, 75 traders have gone over the benchmark that Jack needs to include in a Market Wizards book. And Jack would tell you that out of that 70, 75, let's say, maybe 5 hit the ground running and were successful right off the bat. Mm-hmm. But Jack would say most of them 3 to 5 years, they burnt out several accounts. I burned out 3 or 4. That it takes, I think, 3 to 5 years to really get a scent, to have the rough idea of how you might trade 10 years down the road. But it takes 3 to 5 years to really get an idea of where a person's edge is and how you gain an edge.
I couldn't agree more. And I think a lot of people come into trading, and I think it's natural to do so as well. Like, they come into trading with probably a shorter time horizon. And hopefully, through either Market Wizard series or even watching this podcast or other interviews with real traders like yourself, people who have proven profitability, people can start to expand that horizon and understand that it's a process of learning. And would you say that you have to be passionate about the art of trading, like the intricacies of trading, to really have a career at trading, versus just the love of the thrill and the lifestyle and the money that trading can bring?
Yeah, man, I think if somebody's purpose in trading is to make money, their chances of success goes dramatically down, exponentially lower. Is this that passion to do something and do it really well, and learn how to do it, and have skills in doing it, mm-hmm. and understanding the process of what you're doing, and drilling down and going down rabbit holes and exploring ideas. And the only way you learn how to do things right is by doing enough things wrong.
Yeah.
And that's a time-consuming process. And so, yeah, people come in with the idea. I came in with the idea. I thought it would be a fun job. I thought it would be a great job to be a trader. And traders I knew were making a lot of money. And, so, yeah, that's an incentive. But once you get into it, that's not enough. That's not enough to keep you, and it's not enough to make you good. To be good, you've got to take it seriously as an endeavor in which you want to achieve excellence. If the passion is not there, the likelihood of a trader really making it over 5 years or 10 years is really pretty low.
Yeah, I couldn't agree more. And someone asked an interesting question here as well, in terms of what are your thoughts of edge decay? Have you ever had to redevelop your edge over the years at all?
Well, I think you always modify. I'm not a believer in back testing, by the way. So I think back testing is a joke. People, I'm going to take a strategy, I'm going to back test it. Good luck. The first place, they use in-sample data. They don't use enough variety of data. They don't go out of sample. It's all optimized. It's nonsense. So, you develop the rough idea of how you want to trade, and then you develop it over time. And I've changed some of the nuances of how I trade. They change. I'm going to make a change next year, in fact. but I don't do it every day. I don't do it every trade. I try to kind of save up and think of an idea. Is there something I can do? So there is definitely edge decay. And I moved to being a position trader because I think the edge decay is less for people who hold positions for a duration of time beyond 2 minutes, 5 minutes, 10 minutes, an hour. Is that when you start position trading, edge decay is not as severe of a problem.
Yeah.
The big edge decay is for day traders. And the reason is that their competition, people like Renaissance and big trading firms that get their data 10 milliseconds before the average retail trader because they paid the CME millions of dollars a year to have their electronics piped right onto the clearing numbers. And so they'll exploit, they can detect edges that are trying to be attempted by day traders. So that's where the edge decay is big among day traders.
Definitely. No, that makes complete sense as well. And what are your thoughts in terms of, as someone who's seen the markets for so long and traded them as well and modified over the years, as you said, do you find, or do you think that more traders would find more trading success if they were to broaden their time horizon when it comes to their strategy and swing trade / position trade versus scalping and day trading?
I think that's true. Yeah, but there's a problem with that we both know, Riz, and that is that to really in my world, which is futures contracts.
Yeah.
You can't come in with $1,000 and be a trader.
Yeah, it's true.
Yeah. It's people ask me what's the minimum that they should have to really seriously think about futures trading, and I'll say 25 to 50 grand if you want to make money, $250,000 if you want to live on it. That's out of the realm of a lot of people. So they're forced into some of these day trading prop firms, which you're familiar with those. And what happens is they're forced into day trading because with day trading, they can in effect trade a nominal account of $50,000, at $200 a month or whatever the case may be. So they're forced into a box where there's a big disadvantage to the box itself. The rules of the box, the reality of the box, but they're forced there because they don't have the amount of money that a futures trader really needs to have to trade multiple markets, to trade them overnight, to hold positions, to endure drawdowns and so forth. So there's a big disadvantage, and that is just having the capital to be able to trade properly.
Well, that was actually a question I had for you, because obviously we spoke at length on our podcast in terms of the thoughts on the sort of today's prop firms / funding company route. So we won't go into that. What I wanted to ask you, which is perfect segment into this question, which is what would you advise to traders who lack capital if they aren't to go the prop firm route? What would you suggest to them? If they weren't to go that route and they lack capital, what do you think they should do? Like, what steps should they take?
I think they need to have a day job to start off with. I don't think they should think that they're going to trade. They're going to just start out. They don't have much capital, but that's okay. They're going to make it anyway. Yeah. That's idiotic. Success in trading comes from mental ability in addition to emotional capabilities. Mental ability tells you you're not going to have a $3,000 account and make $200,000 a year. That good luck. And so I think they need a day job. They need to develop in a program. They need to prove to themselves. They need to grow an account from 10 grand to 30 grand to 50 grand. They need to document everything. And after 3 to 5 years, they can go out and maybe raise money among family and friends, develop a track record for another few years with more money. Then they can start peddling themselves to the funding companies. They can go to funding companies. Hey, if I'm a funding company and somebody comes to me with the right track record, even if it's on 25 grand, let's say, I'll take a second look. Say, yeah, well, I'm not going to fund somebody for $2 million because they've traded $50,000 or $20,000. But if they can show me the kind of data even at a lower level of capitalization, which is a data that can translate into larger amounts of money. I think that's a big mistake some traders are making, is they're thinking, if I only had more money, I can be a better trader. That's nonsense. If you can't make money with $5,000 of capital, you're not going to make money with $5 million. Mm-hmm. You want to make money with $5 million, you got to prove you make money with 5,000 first. But I've seen guys grow their account. It might take 10 years. It might take 10 years of having a day job, learning how to trade, where you can grow $20,000 into 200,000, into 300,000, and then start thinking about being a more serious trader with most of your life. But that's a time-consuming process to get there. So it's just, you can't do it in a hurry, is I guess what I'm saying. Is you got to be willing to look at it that this is a long game. So not a one-year process.
It's an interesting question off the back of that, in terms of that being a long game. Someone said, does the pressure and burnout before reaching consistency stop traders from being profitable?
Oh, I think there's a ton of people that could have been good traders, but they burn their money out. And, then they maybe try to raise another round of money. They borrow from their mom. They take a mortgage out on their home, whatever the case may be, a student loan, and they burn that out. And, they come to the point where they're burned out mentally. They're burned out emotionally. They're burned out financially. They might have been a good trader, but they never put themselves into a position to be able to trade the same account with the same account number for 3 years. Mm-hmm. That's one thing I'd look at if I was funding traders, is I want to know the numbers you're showing me is on the same account number that you were trading 5 years ago or 3 years ago. I could care less about the account you opened last year. I want to see constant performance over time. So I think a lot of people burn out before they put themselves into a position where they learned enough to actually have a chance.
Definitely. I think, again, a lot of the theme comes down to that longevity and being able to size correctly to play the long game and stay in the game long enough to develop your skills, develop your consistency, develop your track record, to then be able to open many doors and essentially achieve what you're looking to achieve in trading. I do think a lot of people, when it comes to these funding companies, they only look at these funding companies, forgetting the fact that if you build a track record, even if it's on small capital, there are loads of opportunities readily available for someone who can show positive returns with a good risk management and low drawdown. And even if it's a case where you did that on $5,000, there are people and firms and investors out there who may trial you on $25,000 after that track record is shown, and test you there. And then if you do well there, then bump you up. But again, it's that longevity and that lack of time horizon that traders have that holds them back from doing that.
There's a lot of money out there that's willing to be placed with traders with the right track record. But those track records have to be 3 to 5 years, Riz. Yeah. They're not 3 to 5 years. There are family offices in the United States. There's a lot of families that have their own financial manager. They're looking to place money. There's a lot of fund of funds. There's billions of dollars in the futures market in fund of funds. It's a fund, but it places money with traders. It might, I ran one until I retired full time. I ran one, and we had $28 million out with the various traders that we would place. And there's a lot of commodity pool operators. There's a lot of hedge funds. They're looking to place money with good traders. There's a big world out there of money. What is being placed by these funding companies is minuscule compared to the money that's out there. Mm-hmm. If somebody has the appropriate track record for a long enough period of time.
That's right. And just to wrap up, there was one question I think could be good to finish up with, which is if you had to just give one advice you could give to a startup trader, someone in their first couple months, that could help to reduce the learning curve positively, what would that be?
Risk no more than 0.5% to 1% on a trade. Don't take a loser home. Set. So I'm giving you more than one, but it's set a risk level. What you're willing to lose.
And then it's accepting that as well. I think that it's such an interesting thing, because people will say, oh, I'll risk this much, but they're not actually willing to accept the reality of losing that much, which then normally sends them in a spiral. But Peter, it's been an absolute pleasure. Thank you for spending the time and taking the time out of your summer to be with us today. And I hope to see you again in the future as well. Everyone, go check out the episode with Peter actually on the main channel. We go into his journey and his process of getting to the point of being a market wizard and his thoughts on the industry as a whole. So if you haven't already, make sure you check out that full episode. And links for Peter are in the description below also. So make sure you go check him out. Has a huge Twitter community, larger than most traders in the industry.
Thanks, Riz.
My pleasure. Thank you. We'll speak to you soon.
Nice talking to you.
Always.
Bye-bye.
Thank you. Another successful stream. Incredible. What sound do I have for us? What's this? No, that's not the right sound. That's not the right one. We'll go applause. Huge thank you to Peter there. Any final questions for me before we wrap up for today? Wow. Well, that's a bit loud. Let's get rid of that. Yes, what a phenomenal stream. Let's just recap for a moment there. You have Chris Camillo, a phenomenal market wizard who has made over $50 million trading information. No technicals, no fundamentals, no stop losses. Bear in mind, we didn't go into that too much, but no stop losses. If you haven't already, check out his full episode on Words of Wisdom. If you want to know deeper about his journey, his process, about the no stop losses thing I just mentioned, check it out. Rande Howell, a world-renowned trading psychologist, someone who really is so insightful when it comes to the trading mind. Check him out. Full episode as well. Is out on Words of Wisdom. Is, I think, crossing over 300,000 views in just a few weeks, which is incredible and shows you how much value is in there. And then, of course, just then, Peter Brandt, another market wizard, a 50-year trading veteran, someone with a wealth of knowledge, and actually only uses technical analysis across various asset classes as well, and is now position trading more often than not as well, which is phenomenal and really shows you the differences in trading styles and how they can be profitable. Look at that. Peter Brandt, 50-year trading veteran and completely technical. Chris Camillo, right? Track record coming up on 20 years. Been trading since he was 13 and doesn't use technicals whatsoever. Right? And that shows you anything's possible. What matters is that you create an edge that is right for you and resonates with you, and then develop your mindset around that edge, right? And be self-aware enough around that edge and your performance to perform long term. That is trading. That is trading. Absolute pleasure. Don't forget, of course, that you get the best deals with Chart Fanatics over at Funded Next for your CFD funding. You get free value on Market Journal. Now, guys, if you aren't into fundamentals in terms of like really deeply understanding fundamentals, Market Journal that was just on screen will do that for you, right? Every single week, every Sunday sends a free newsletter directly to your inbox so that you know exactly what's happening in the markets and how it can impact the markets without having to do any deep research yourself. It's literally like an easy read. Here's a massive giveaway on Prop Firm Trader. So if you use the code PFT on propfirmtrader.com, there's a $1.5 million giveaway every week that one person wins. So one person wins $1.5 million in challenges across, I don't know how many firms now, like 10 firms or something. It's crazy. And then again, all of our guests today talked about data, and there's no better place than TradeZeller, obviously, the #1 trading tool in the markets. You can backtest on there. You can automate your journaling. You can select playbooks, do bar replay, put in your reflections, and get in-depth analytics and so much more. TradeZeller, get 20% off your yearly subscription on TradeZeller. Use CF20. If you want to do monthly subscription, you can get 10% off. That's CF10, by the way. I do recommend the yearly one because if you're going to do journaling, you want to do it long term. That's where the actual benefit is. And of course, finally, Apex Trader Funding, the #1 and biggest futures firm in the entire industry, 80% off. 80% off. So one-step evaluation, trade up to 20 accounts. That means up to 6 million. 6 million in funding and payouts every 8 days. It's phenomenal. And there's no caps as well. Bear in mind, people have done 2 million, 2.5 million in payouts in one single payout. And that's only ever happened at the one firm, Apex. So check that out as well. this whole show and channels aren't possible without our sponsors, because to do all this high production, to get these level of guests, to especially do Chart Fanatics and Words of Wisdom in person every single week and bring you the best, costs a lot of money. And our sponsors make that happen, to be honest with you. So huge shout out to them. But again, thank you all of you for tuning in. It's it's a long stream. It's it's what, 3 hours, over 3 hours stream, and most of you have been here from start to end, which is incredible. And a huge shout out to the team. We had some technicalities today. YouTube tried to mess with us. Peter's camera there, but everything all good. Thanks to the team as well behind the scenes. Remember, guys, two things. One, Chart Fanatics yesterday launched a video with Ariel Hernandez, a trader who took $30,000 to over $10 million. That is out on Chart Fanatics right now. Go check it out. It gives his exact entry criterias that he uses to make over $10 million in the stock market. So make sure you go check that out. So many entry methods given in that video as well. So go check that out. And then from tomorrow, you have live trading with Marco Trades tomorrow, TG Capital on Wednesday, and Marco again on Thursday. Let us know. Send us a message on Chart Fanatics Live Instagram. Let us know who you would like to see trade live on Chart Fanatics Live, and we will reach out to them. Potentially, they can take up the Friday slot, or even take this Monday slot from me. Who knows? But everyone, until next time, take care of yourself.